Can you all hear
Hello,
me?
sir.
Can you all
Hello,
hear
sir.
me?
Yes. Go ahead.
Right.
Yeah, yes.
Okay. Right. Any questions from the past session? Any questions? Is there any questions? If you can respond me, it will be easy because once I go back to the set of slides, I can't see any your comments. Any questions? Right. So today I'm discussing the importance of collateral for the bank lending, and now according to your knowledge, what are the good securities that you know? Yes, according to your knowledge, what are the good securities? Hirante, what are the good securities that you know? Hirante, Krishanta, what are the good securities that you all know? Hello, can you all hear me? Can you all hear me?
Yes, Mr. Anand. We can hear
Yeah,
you.
yes. Now, according to your knowledge, what are the good securities?
Normally, theoretically, it says first class securities and immovables.
Okay,
And,
immovables,
yeah.
right? So you think immovables are good? That's property is good. Okay.
No, that's why I mentioned theoretically it's
Okay, theoretically. So practical, from a practical point of view, what are the good securities?
it depends on the marketability of the security and the
Okay. Right.
probably
So the marketability, right? Okay. Now we have certain securities. We have vehicles. We have stocks, machinery, book debts, personal guarantees, property. Out of those securities, what are the good securities?
in that with that securities, I think the properties comes first.
Okay, right. So the point is where now bankers, they spend a lot of money and time, and they collect certain set of documents, but finally at the end of the day, for me it's a unnecessary or we are not getting maximum out of that efforts, because but unfortunately because the regulator says that you can't lend without collateral, bankers, they insist on customers to bring collaterals. But finally we get a lot of collaterals, we have certain collaterals in the market, but we can't get what we really want at the end of the day. So there are a lot of practical difficulties in all the collaterals, but still we have, since we don't have any options, we go for the available collaterals in the industry. But you must understand that more than the collateral, you have to, if the KYC of the customer is much more important. Now, if you know the customer, and if you know the customer's business, if you know the customer's relationship with the bank and banker customer relationship, you don't have to depend on the collateral, because sometimes bankers, they lend while considering the collateral. Right? So there is no requirement for you to consider the collateral if you follow the correct process and if you know the customer, right? Collateral is something additional, which is there in case if you if you if you can't recover, to use that as a backup for you to recover your outstanding. But considering from the practical concerns, there is no security that we can consider as good security. So cash is not security. We can't consider cash as a security. So again, if you are keeping my own money and taking a margin of 2% or 3% and lending to me, there is no risk. Finally, you have lent against me, my own asset. But from a business perspective, since we have to rely on the securities which are available in the market, you take securities, but all these securities have a lot of problems. Not only the theoretical problems, more on practical aspect. So though we take securities, I will explain the practical difficulties what we face when you are taking securities as a for lending. And out of those, even we'll say that these securities are good. Because of the failures of obtaining this documentation, finally you can't go follow the debt recovery provision which is available for bankers for a shorter recovery method. So therefore you follow the lengthier method, that's money recovery action. And as a result, once you get the judgment, most of the time the asset is not available with the borrower. Either he can sell it, he have sold, or asset is destroyed, or he has realized already, or he has sold. If it is in case of a vehicle, he has already sold the vehicle for parts. So there can be a lot of practical difficulties. So finally, after carrying this battle for 4-5 years against the customer, bankers will have just a writ in favor of them, but finally they can't exercise any rights or recover their outstanding. So legal battle is good. I'm not going to say it's bad, but if you can put the real pressure to the customer, it will give a lot of value addition. That is why the debt recovery provisions were introduced. But unfortunately, bankers have failed to exercise these debt recovery provisions to get the or convert this NPL into cash and recover the outstanding. Right. Now, what are the requirements for a valid contract? Yes, what are the requirements for a valid contract? So we are talking about a contractual relationship, banker-customer relationship. It's a contractual relationship, and it's not an oral relationship. It's not an oral contract. It has to be a written contract. And because since we are lending public money, you can't have oral relationship. If I come to your bank and if I ask, I give me 1 million over the counter, you will not give me 1 million. You will say, okay, we have a process. You fill these forms, and after evaluation, we will consider your request. And after filling these documents, if we require a further security, we will give you 1 million. So therefore we have a contractual relationship. So it can top of that, it has to be a written contract, not an oral contract. Now, what are the requirements for a valid contract? What do you think? Can someone tell me what are the requirements for a valid contract? Yes. Kumudu, what are the requirements for a valid contract? Kumudu. What has happened to you all today? Not responding at all? Vishwanath?
Agreement.
Agreement, okay. Mali, agreement is yes. Now, to form a contract, what is the first requirement? There is first requirement.
There should be a customer request from the client side.
Okay, forget about the customer. Just think about a normal day-to-day transaction. Other than your bank transactions, there are a lot of contracts around us. Every day we are doing it, right? Now, what is the first requirement? So agreement is fine. Adika, can you tell me another requirement?
Proper understanding.
Understanding, okay, fine. What else?
Purpose.
Sir,
Purpose of the
two
transaction.
or more
Sorry?
parties.
2 or more people, right? Okay. Okay, 2 or no more parties indica, right? Yes, Kalpa?
Purpose of the requirement.
Purpose, okay, right, okay. So that's first one is the intention. First, your triggering point is the intention. Now, for an example, you go to a restaurant and buying a bun is a contract. It's a contract. Every day we do it, but it's not in a written form, it's in oral form. Now, for an example, now I realize my system says I'm hungry. So my intention is clear. Now I have to eat something. For me to eat, I have to go to a restaurant. So I first see, okay, intention is clear. I'm hungry. Second one, I will see whether it's legal. Yes, buying a bun is not an illegal activity. Then I will see whether I have the capacity, contractual capacity. Any person above 18 years, or even when you come to buy a bun, any person, even a minor can buy a bun. So no problem. Then I will go to the counter, restaurant, and I will say, I want a bun. So that is offer. You make the offer, and the restaurant, whoever the waiter, accept your offer, and he will put a bun into a bag and keep it on the counter where you pay the consideration or the payment, and you take the bun home and come and eat. So there are 2 or more parties. Agreement in informal type of agreement, not a formal. You don't have to sign an agreement there. So all this traveling in the bus, everything is a contract. Out of the contract in this earth, almost 99% contracts are oral contracts. Now, if you have to come from Maharagam to Colombo, and if you have to write a contract, sign a contract, typing your name, address, everything, and it will take hours and hours, you won't be able to come to Colombo within half an hour or 1 hour. It will take more than 1 day for you to fill forms and come to Colombo. So therefore, most of the contracts are oral contracts. But when you come to banking business, it has to be a written contract. So why? When you have a written document, it's very easy for you to prove. The contract will have terms. Terms can be conditions or warranties. Conditions are the most important requirements. If you breach a contract if you breach a condition, you can repudiate, you can cancel the contract and claim for remedies. There is another terms. You have 2 forms, conditions and warranties. Warranties is less important. Now you want to buy a car and you say, I want a BMW, the latest model, 2022 model. And in that particular brand, you say, I want a setup which is on this high-end brand. So they bring you the vehicle, 2022 BMW vehicle. So since its condition is fulfilled, there is no violation. But instead of the brand what you wanted for the setup, they have included a Chinese one. So that's a less important a warranty. So where you have to accept the vehicle because the setup is in a different brand, you can't reject the vehicle, you have to accept it. But the difference of the cost, your brand and the Chinese brand, they have to pay you. That's the damages that you get. But instead of bringing a BMW 2022 vehicle, if they have brought 2021 vehicle, you can say, I don't want because this is what I wanted. So you can repudiate, cancel the contract and say, we don't want the contract, you keep your vehicle. So when you come to contract also, when you are entering into contract with customers, there are terms. Important terms we consider as conditions, less important we consider as warranties. So any breach of a less important, only you have to pay penalties. But in case of a breach of a condition, or for an example, customer secrecy, it's a condition. If you breach customer secrecy, customer can take you to courts and cancel the contract and claim huge amount of damage. So those are called conditions. So when you're lending also, you will have conditions, important terms, less important, If the customer is not fulfilling the most important thing, the conditions, you can breach the contract. You can consider that it's breached, and you can thereafter proceed with whatever the damages. So when you come to customer, as I told you, you will have to have the intention, legality, capacity, offer, acceptance, consideration. Two or more parties is an obvious requirement. Single contracts are not there, and an agreement between the parties. What you will dictate your terms, that party will dictate their terms, and finally they will come to a settlement and they will proceed with the contract. Any questions? Lending through written contracts, right? So customer request, internal proposals. So once you get the customer request, you will go through the internal process, and you will put forward that to an internal approving process. So once the approval is the customer request and the intention, internal proposals, we consider the intention. So my intention is to obtain a loan from you. Your intention is to give me a loan. That is why you have you started the internal approvals. So that's the intention part. Then I will have the capacity, because I can borrow, and borrowing is a legal requirement. Then once the facility is approved, you will give me the offer letter, and I will sign the acceptance and the rest of the loan documents and the security documents. Those are the agreements. And after that, you grant the facility to my account. That is a consideration. So for all contracts with our customers, you have to have these basic requirements. If you don't fulfill these basic requirements, intention, capacity, legality, offer, acceptance, consideration, agreement, then we can't consider that we have a contract with the customer. So top of that, we want written contracts. We don't want oral contracts, because that is why we say you get customers covering approval, right? Covering request. Sometimes I can give a call and say, look here, please stop this check, or please pay this check. But then you will say, no, send us a small note to say, please pay this check number 1234, or please stop this 1234. So at the request of the customer only you are doing. But you can maintain relationships. As I told you, the KYC is the most important requirement. But at the same time, you have to go further and ensure that your documents are perfect. So unfortunately, what happens, bankers, they fulfill the requirements of all these contractual requirements. But when you come to documentation, the documents are incomplete. So as a result, right, they can't exercise the benefits what they have from the debt recovery provisions. So last week there was I have included that link also at the last slide. So there was a certain concerns from the public to the central bank to say that bankers, they have a lot of profits, and they are taking customer properties and selling to outsiders without customers' consent, and so many other things. So the central bank governor has stated that he is going to amend the law. An independent party will give the confirmation that whether you can proceed with the debt recovery provision. So it will be another hurdle for the bankers to jump, and it will further, what I see, it will be a step which will drag our freedom to exercise the rights. So unless collectively the bankers decided to go for debt recovery provision with perfect documentation, we will lose that right as well. So when you are not using also, people might say, the authorities might say, since you are not using, we are going to remove it. So that's a disadvantage. So please make sure that importance of having perfect set of documents is a timely requirement. Even from now onwards, you have to ensure that you get a perfect set of documents in order to proceed with the debt recovery provision. Any questions? Right. Now, when you're giving an offer letter to your customer, So there can be individuals, there can be partners, there can be companies. Now, how do you address a partnership letter of offer? We say A Silva, B Pereira, AB Enterprises. How do you address the offer letter to the partnership? Yes? Can someone tell me how do you address the offer letter to the partnership? Yes?
We normally address to the person, partners personally.
Okay. So A Silva and B Pereira partnership, AB Enterprises.
Partners of ABN. Yes.
Right. Now, if you have 20 partners, how are you going to address? You said that partnership has 20 partners. Then how are you going to address? Yes? Omali?
Partners of the name of the company.
Name of the firm. Yes. Partners, AB Enterprises. So the legal persons behind the partnership are the partners. So you have to address the partners, not the partnership. Because partnership is not a legal firm, a legal body. It's a firm. Right? So the partners behind the partnership are the legal person. So you have to, when you're taking actions, you need to ensure that you take action against the partners. And when you want to buy a property in the name of the partnership, you have to purchase in the name of the partners, not in the name of the partnership. Right? So similarly, when you are issuing a offer letter to a company, you can issue the offer letter to the company because company we consider as a legal person. Right? So company is a legal person, therefore you can issue XY enterprise, XY private limited. But when you are issuing an offer letter to a company, there are certain important conditions that you have to include. Right? Now, at the same time, now you may be having standard offer letters. You will be having one offer letter, standard offer letter for loans against fixed deposits, one for movables, immovables, stocks, machineries. You will have an offer letter, standard offer letter. So what you do, you get the printout and you change the name and the address, the loan amount, the collateral, and the rest of the points are standard. And two officers will sign and you issue the offer letter. But make sure that this all these changes I have highlighted in this were introduced. I don't know whether you are using these points in your company offer letters. Were introduced with the Companies Act 7 of 2007. Now already 15 years have passed. So what my understanding is where companies they don't change the offer letter formats. They think the original one is okay. No problem, we can use for any customer. No, that is not the case. Now, depending on the customer, there are certain facts that you have to change. So standard points will be there. In addition to that, you have to have the flexibility of changing according to the customer, right? So using a standard format is fine because then you are not deviating from the key principle. But at the same time, when you look at the customer, based on the customer's weaknesses, you can include one or two conditions and issue the offer letter. Right? So standardization is, as I told you, it's fine, but be careful. Sometimes if you want to use some important points to the offer letter, since you have not included, there'll be a problem for you to recover at the time of recovering the outstanding. So these are certain points which we identified as important for an offer letter. Almost all the banks are using these points. And further, we need to see what are the new developments and how we could change the offer letter according to the new developments as well. Now, one important point is reduce or cost to be reduced in any manner your stated capital. So you request the customer to inform in case if you're going to reduce the stated capital of the company. Why we are insisting that now you're lending against the company's stated capital. That's the shareholders' contribution. If the shareholders' contribution is acceptable, you're happy, you will lend. Because you see what is your exposure and the shareholders' exposure. Now, without your knowledge, if the shareholder is trying to reduce the stated capital or the shareholders' money, it's going to be a problem for you to consider the facility. So therefore, you include a condition to say it is a mandatory requirement for the shareholder to inform in case that they are going to reduce the stated capital. But practically, sometimes these customers, they don't inform, but at least you have included the condition and you have got the signature of the customer, right? So that's important. At least, and at the same time, when you are continuing the relationship with the customer, that's the KYC, you should be able to understand whether the customer has reduced his stated capital. So the last year it was 200 million. Now this year when you want to give a facility, you realize it's 100 million. So he has almost 50% he has reduced. So that's a risky customer. And though this content is in the offer letter, they have never informed you. So then you have to be very careful. Always make sure whenever you are giving a facility, right, see the stated capital of the customer and see whether they have done any of these things which I have put on this slide, comparing with the previous situation. So if they have done any changes, those are alarming points. You have to be careful and you have to reconsider giving the facility to the customer. Now change the shareholding of the company. Earlier it was ABC. All ABC3 were very strong customers. They have a very, their prepayment capacities were very high. ABC were the directors as well. Now all of a sudden the business has changed. Instead of ABC, now it's handled by XYZ. Their credit standings are not so good. So when you're giving a further facility, you have to be careful because the shareholding structure has changed. This is another point there below. And the shareholders have changed. So then you have to reconsider and see whether this is this facility, whether you can continue, or whether you are going to reduce it, or whether you can give a further facility. Right. So if when the shareholding is changing, also they have to inform you. Repurchase of own shares, redeem shares means the same. Company can repurchase its own shares. Now, for an example, in case of a listed company, we have 300 plus listed entities in Sri Lanka. Unfortunately, now there's a trend of companies becoming listed. Earlier, there was no so-called, almost 15 years, we were struggling to pass this 300, 310. Even now, we are just around that because the last this government at the previous budget, not the immediate one, the previous one, they encouraged companies to be listed and they told they are going to consider a tax concession. So as a result, we saw Prime Land got listing, Jet Holding got listing, Hela got listing. There were certain companies got listing. So that's a very positive remark for the country's listed entities. More you have listed entities, people will get more opportunities to invest. Then diversified businesses will be there. Right? So then if the deposit rate goes down, you have another option where you can keep this money in a share because you have a lot of options and add value to your bottom line. So this repurchase of shares is where if you have purchased shares in a listed company, of course, no problem. If you don't want the shares, you can sell in the market. It's a matter of giving a call to your stockbroker and request them, I want to sell these shares. But in case of a unlisted entity or a private company, if you don't want the shares, it's not easy for you to sell, right? So you will have to go behind all the shareholders and ask whether you are willing to buy my shares. So if the rest of the shareholders says, okay, we will buy, no problem. But if none of them are willing to purchase your shares, then only option available for you is to go back to the company and request them to repurchase or buy back shares. So these were introduced by the 7 of 2007 Companies Act, which is based on New Zealand and Canadian law. Along with that, the bankers included this condition: in case if you are reducing your shares, we have to inform us before reducing it, because otherwise you think that the stated capital is this amount. Finally, you realize they have reduced the stated capital to a minimum. So their exposure is low, whereas the bank exposure is very high. So that's another area that you need to ensure that you have a control. And mergers or amalgamate with another company, including a subsidiary. So if the company is going to merge or amalgamate with another company or a subsidiary, they have to inform prior to the change. The whole idea is that now if you consider the company and you lend. Now just imagine if the company is going to merge with a big giant company, and as a result your share prices are going to jump. That's a very positive thing. So you are happy, right? Because your net worth is much more higher than previously. At the same time, company is going to merge with a company who is doing bad, insolvent. So then the net value of the company will go down, which is not good for your books, especially for your loan book. So then the value will come down, and then you have to reconsider whether you are going to continue this with these facilities. So that is why, in case if you are changing your position, amalgamating, merging, that has to be informed to the bank before you start that particular activity. And the other one is alienate part of your business. So you have a business in two forms, two parts. We'll say buying and selling, right? You will say not buying and selling. So you will have one is buying and selling in one business, and the other one is transport. So this transport business you are going to close down, right? So just you need to see whether out of this decision whether it will add value in the long run, or whether that's good for them to close down the business. So in such an instance also the business must inform you as the banker, "Oh, we are going to take this decision and we need your consent." All the capital structure, once again, earlier the capital structure was shares were held by only the individuals. Now you bring a institutional investor, then your structure will change, and where you are going a major percentage of for that particular company, right? So then the structure earlier among individuals, now you get a giant institutional investor who have purchased 50%. Undertake any major transactions. That's also important. Major transaction is defined by the Companies Act. Any transaction that you enter where the total value of the transaction is more than 50% of your current assets, we consider it as a major transaction. So purchasing a major transaction or forming a contract to purchase some assets, that's fine, because it will definitely add value. But what happens on the other hand, if you are selling 50% of your assets or entering into a contract to sell 50% of your assets, it will reduce the net value of the organization. So all these instances, for a precautionary action, the bankers have requested customers to inform the bank, and those conditions are included into the offer letter. So even those conditions are there in the offer letter, sometimes customers, they don't inform. So but still, in such an instance, you can put the responsibility to the customer to say, though we told you, you have you have failed to do that, so that itself a breach of contract. So please make sure that if you have not included this type of important statements, you need to include and ensure that your rights are protected against the customers who are willfully defaulters in the long run. Any questions? Yes. Any questions? අද කට්ටිය ටිකක් කම්මැලි වෙලා වගේනේ. Yes. Any questions?
Yeah, so far everything is clear, sir.
Yeah. Normally, this teaching to bankers is a very tough game. Right? They don't open their mouths. I don't know what is the reason. Either they don't want to share their weaknesses that they think that the others will get to know, or they're I don't know what the reason. Sometimes they, without an interest, don't know whether they have joined for these sessions. So it's common among the bankers, right? Wherever, whatever the forum, bankers are very, they don't interact for some reason. I don't know what is the reason. They're a little bit reluctant because I conduct lectures for a postgraduate program at University of Colombo. Still the same young set of bankers. Very difficult to get things from them. Only one or two are reacting. Others they just keep quiet. I don't know what's wrong. Either don't know whether they don't know what's the principle, or they don't want to understand, or they don't want to share issues. There's some problem among the bankers. That is my conclusion. Okay, right. Now, why security is taken by banks when lending money? So you might think, okay, since the regulator says, or since it's a practice, we take security. But if you say the Citibank, they don't take securities based on the customer turnover. They they handle lending. But they have one certain category of customers. They don't go for this retail type of business. They have corporate level customers. So they are strong. So they don't have to depend on securities, right? And the point is where getting a security and lending is fine. There's no argument on that. The question whether you take a perfect set of documents is a question. Whether your documents are perfect, whether you can do anything with this security, right? Considering the practical aspect. Most of the time, it's a waste of time. Because I know that bankers, they put a lot of efforts on documentation. Now, if it is a property, you will have to request the basic documents from the customer. So then the customer will submit those documents. Then we have to refer to the legal officer. Legal officer might say, okay, this document is missing, that document is missing. So in between, you get sandwiched and you request once again to the customer. Sometimes the customer brings that document. Then once again, your legal officer will say, this is not adequate. So finally, as a frontliner, you are in trouble. And somehow you, with great difficulty, you coordinate and you get the all set of all the documents, and you create the mortgage, and you proceed with the facility. So the problem is where now your documentation, whether you have taken all the documents at the right time in the right process. So sometimes the organizers, the bankers, they don't know what is the procedure. Now they will give some answers, but they don't know why they are doing that. Now, if I ask a question, you might say yes. But if I ask the second question, why? Sometimes you don't have the answer for the second one. Because the answer for the second one is the reason for you to do, for you to say yes. But if you don't know the answer for the first one, then you are doing because your boss says you do. Or yes, your superior told you do this. But you are not doing it with a sense. Then finally what happens, right? When something goes wrong, you might say, okay, my boss told me to do it. No, boss might tell you, but you have a responsibility to ensure what I'm doing, check and see why I'm doing this. Right? If you don't make a sense why I should do or why I'm doing this, you need to have a chat with your boss and say, why we are doing this? What is the requirement? The law doesn't say there's a requirement, right? Why can't we correct this? Why can't we change this? Because finally it can be an action where you're putting a lot of pressure to the customer for him to bring certain unnecessary documents. And finally, you are not getting use of any of those documents. Right? So therefore, it's a requirement for you to revisit the processes. Now, all of you all are taking decisions, right? Now, all of you all are computerized banks. You all are heavily depend on the systems what you have. You enter data into the system. Maybe the accounts opening department is entering the information, and it will get validated. And there is a back office team who will use this information which are there in the system to take decisions. Sometimes you take a printout and you send it to the board to take a decision. Now my question, are you all happy with the data what is available in the system? Yes, can someone tell me, are you all happy with the printouts what you take from the system and the data clear data which are in your system? Yes, can someone tell me? Janine will share your thoughts. Don't worry, it will not go out of this classroom. Are you happy with the document information which are there in your systems? And are you happy with the outcome or the document what you get from the system? Yes. Indika?
So I'm a non-banker.
Yeah,
Well,
whatever business,
yeah,
whatever your business.
Yeah, actually, most of the time, some details which you are taking is not really useful and just form filling exercise. In my business as well. Um, I don't know it's related to banks how it is happening, but
Okay.
most yeah.
Right.
Yeah.
Krishanta? Krishanta? Krishanta, are you there? Small request. If you don't just link to the system and if you're not behind the screen, don't please link to the system because no use. Right? And also if your mic is not functioning, if your video or the visuals are not functioning, don't join to the lesson because that will not add value at all.
Oh, so
Yeah.
you told me?
Yes, Krishanta?
Yeah, cleansing is, yeah, I'm a banker.
Yeah.
Cleansing has been done now, these days done by regularly actually.
Okay. So my question is whether now when you get a printout from the system, are you happy with the printout or do you feel that you need further changes in this printout or you feel
Most
that
of
this...
the time it's updated, the data is updated.
Okay.
Sometimes we have to refer some other people so having get more
Okay.
data.
Okay. So cleansing is something ongoing, but don't think that you have done the cleansing last year, this year, you don't have to do it. So that's a mistake that we bankers, we do. We think, okay, we have a good system. That doesn't mean that your data is up to date. So KYC is continuous. If you take your customer KYC, if you have done last year, out of the KYC customers, those what you have, definitely there will be at least 1% who have changed their data this year. Right? Sometimes you realize, okay, you have taken a printout and this all, according to your gut feeling, the report is totally different one. So what I want is to bankers to ensure that they have a proper cleanse system. Not having the best system, clear system. So then it will be very easy for you to extract the correct information. Right? Otherwise, you are taking decisions with wrong information. Finally, you will not be able to get the right picture. Sometimes your board might ask a different question to say, okay, why, what is this? Some obvious mistakes sometimes you can see in your reporting. So be careful. It's a very important now. All the boards and the regulators are very concerned about those things. The accuracy of information what you give. So accuracy depends on the clear data, cleansed data. So cleansing is an ongoing thing. Each and every officer in the bank is responsible, or whatever the company is responsible to ensure that you have clear data and up-to-date data. So it's a KYC is not a ad hoc event. It's a continuous thing. So I opened the account last year and I changed my phone number. I have to inform you. I changed my residential address. I have to inform you, right? If I'm not informing, you have to have a mechanism to get updated those information. But most of the time, this is not happening. As a result, uh, you can't track me, especially if I have given you a facility. If you have given me a facility, you should be able to track me. Otherwise, without knowing my address, you will not be able to maintain the case. So therefore, be careful on that requirement. It is a must. Why security is taken by banks when lending money? Successful bankers will argue that the decision to grant a loan to a customer must never depend on the security that the customer offers. So if I come to a bank and if you ask what is the security that you are going to give, I think that you are in the wrong direction, because your interest is to make sure you have a valid security. No, that is not the case. First, you have to see whether this is a suitable request, whether I can repay, and thereafter only at the latter part only you have to ask what is the security. Bankers must first satisfy himself that the purpose of the loan is reasonable and that the customer is trustworthy and can be relied on to reply the loan plus the interest, right? So what is more important for you to understand whether my request is okay, whether I am a trustworthy customer, can you rely on my repayment capacity? Sometimes customers might say, okay, look here, I have a permanent job. In addition to that, I will do this and that and that. And also I get the sales commission. So what you have to understand, sales commission is not a permanent income. It depends on the sales volume. During a pandemic period, sometimes your sales income will go for zero. So if you have considered the sales, what do you call the commission, you are in trouble. So at the same time, today, losing your job is also keeping your job is also a risk. So in such an environment, getting the sales commission is no assurance at all. Security provides insurance and comfort for the banker that in whatever circumstances he will be repaid, but it is not sound banking practice to lend against security where doubt exists as to the borrower's ability to repay from income or profit. So don't depend on the security. Security should be the last discussion point, not the first one. You should not lend against security. You have to lend against the customer's KYC and his capacity, right? Security acts as a cushion for an advance, as it would be the only means where the bank could ultimately rely on in case of possible loss. So I doubt whether we can rely on as a cushion when you consider the securities available in the market, right? All securities have a lot of problems, practical problems, theoretical problems, right? And but still you consider securities and you proceed the facilities. So there is no option for you to do. That is why you follow those. Any questions?
Sir, can you execute a mortgage bond more than its market value or the for sale value? The properties, when you consider
No,
mortgage bond.
you can't execute now. When you
What
are
is the if you
yeah, so what happens
you
here?
do?
Yeah. Sorry, can you?
What are
Yeah.
the consequences and what is the impact on that doing it? Because sometimes we consider facilities more than the property value. If you accept the property as a collateral, sometimes there may be a clean portion of that facility. So sometimes some bankers, they do mortgages more than the property value. Sometimes it is more than the market value.
Okay.
So what is the validity of doing that? Executing a mortgage more than the market value of the property.
Yeah, the point is where now I have a property 10 million. So normally bankers, they will go up to, that's a market value I'm talking here. Or we'll say the for sale value is 10 million. Out of the for sale value, sometimes they consider 70% and they give me 7 million. Now your question, where the property value is 10 million, where you have executed, given me a facility of 15 million. So you have an unsecured portion. Now this is what happened in Pramukha Bank. What they did was they overvalue the assets and gave facilities. Now my 10 million property, they overvalued for 15 and they gave me 12 million. So finally their NPL ratio went up to 80%. Now if your property is 10 million, if a banker is going to give you 12 or 15 million, you're up on the deal. Why do you want to sell? Because you have got almost 1.2 or 1.3 or 1.5 times. So you will default from the day one itself. And at the same time, when you want to sell, the actuals will be very low. Then, though you have the mortgage, sometimes you will not be able to get the maximum out of that because there is a for sale value that you can claim maximum. So you have gone above the for sale value and you will have to bear the loss. So execution is not a problem. You can, even for 10 million, you can have 100 million. But if something goes wrong, you will not be able to recover one aspect. If you have given value higher than the normal property value, customers will not pay at all because they are upon the deal. No? 10 million property, you have given me 15 million. Why should I pay? I will default and I will request, okay, if you want to take the property, no problem for me. So this is the challenge that we see. So unless you understand the customer, there are banks who go up to even 100%, even 90%, but not beyond that. There can be two reasons. One, the property market, we don't know. Uncertainty is there. That is why we keep a margin. We say maximum 70%, nothing more than that. Right? So if that is the case, if the property market crashed or go up to a lower level, you're reducing your loss because you have granted only 70%. And so you can do Kamudu, that's not a problem. But finally, when it goes bad, you will not be able to recover the difference. That's the point. Okay, that is what happened in Pramukha Bank. They overvalued the assets and they gave loans. And finally, customers, they defaulted and their NPL ratio went up to 80%. Okay, any other questions? No? Right. The bank should be able to obtain a safe, unquestionable title without undue trouble or experience. Now, majority of you are told, okay, property is good. Safe, unquestionable title. Now, when you, now normally before you purchase a property, you will go and check at the land registry to see whether so-and-so is the owner. So, okay, then you see, okay, my name is there in the extract that since I have brought my original deed, you might think, okay, I'm the owner. Now, what is the assurance that you know that still I'm the owner? Is there a way that you can check? Once you get the extract, it's fine. But at the same time, if I'm a smart customer, if I know how things are happening, I can give you the original deed. That's not a problem. I can get a duplicate from the register of companies, register of lands, and give this duplicate to another person and sell the property. And I will ensure that the transaction will not get registered in this particular portfolio. I will ensure. That's very easy. Now, normally, any subsequent transaction will get registered in the previous folio and you create a link, carry forward to A20250. So then the other page will say from the previous reference. So if I want, I can ensure that this cross connection is not there. It's a matter of giving a small fee for an officer who is entering the document. He will not enter the previous registration. It's very easy, right? So then there will be another chain that will continue. And this chain you will check and okay, you are happy, I'm the owner, and you will execute a mortgage. So this could happen after mortgaging your bank. And this can happen at the same time after selling to someone as well. So you need to be very careful in that aspect, right? That doesn't mean once the customer brings the original document to you that he is the real owner. There are people who will prepare duplicates where you can't understand whether this is the original or a duplicate. It will be better than the original. If the deed is executed in 1968, they will ensure that they will produce a document for that particular period, right? And you can't see any difference from the original to the duplicate. So they are very smart. Now, I don't know whether you have experience. If you want to send your child to one of the leading schools in city, Colombo, Kandy, or wherever, government schools, there are people who prepare all the documents for 100,000. Lease agreement, deeds, plans, everything, voters list, everything. Right? So if they are doing it genuinely, that's fine. But most of the time, they are preparing forged documents. When you look at the forged document, sometimes it's difficult for you to understand whether this is genuine one or the duplicate. So they are very smart. So be careful when you take this kind of a decision, especially the property value is very high. You're taking a margin of 80 or 90% and we are lending. There can be the transaction, what you get can be from a forged document, right? So be careful. That's very important for you to understand. There's no assurance when the title deed says or the title extract says that so and so is the owner that he will be the owner. Especially if the customer says the original is missing and I have the duplicate, be careful, right? But at the same time, do you all register this priority notice? You register priority notice? Yes, Kumudo?
Yeah, we do.
Yeah, what's the whole idea of registering a private notice? What do you get?
But the security will be obtained as the property, the particular asset will be obtained as security to the bank.
No, that is not the case. Tamara? Tamara, are you there?
Yes, sir.
Yeah, any idea about that? What is why?
I'm also non-bank. I'm also non-bank.
Okay, right. Omali?
In the event of dispute, the priority will be given to banks' debt obligations.
Yeah, so the point is where now your lawyers will go and do a search today. They realize Exilva is the owner, then no problem. Exilva has come to your bank to mortgage the property. So as soon as they file the private notice, though you execute the mortgage bond even after 1 month, you will get the priority from today onwards. So any subsequent transactions will be subsequent for this priority. So the mortgage was signed after 1 month, still the priority for that mortgage come from today onwards. So that is the advantage of having a prior notice. And not only that, make sure that the prior notice is registered, because in between, prior to the prior notice, there can be certain transactions. So it's a must for property. You have to register prior notice. If you don't do it, yes.
So that priority notice that should be suggested from the lawyer, that whoever who's doing the title, or the responsibility is from the bank side, like the business.
Yeah, so that has to be. Now your lawyers are outsourced lawyers or in-house employees?
Both. Based on the value of the mortgage bond, we refer to internal lawyers as well as external lawyers.
Right. So that's the bank's policy. Now, for any transaction, irrespective of the amount, if the banks has a policy to file a priority notice, that's your decision. Then you convey to the outside lawyer, look here, if you are doing a mortgage, we have to ensure the priority notice is there. Before releasing the funds, that priority notice has to be registered and you have to have a copy of the extract. So that's the bank's policy. But at the same time, that you can request the customer lawyer to give the recommendation, but it will done according to the bank's policy. So finally, it's your responsibility to give instructions, right? So any deed, if you're purchasing a property, also the same process. Right? Sometimes you might think, okay, he's a genuine guy and he has shown everything, and you proceed and you sell all your assets, and when you are going to purchase, you will realize that he has already sold the property by getting a duplicate. So then you are in trouble, no? So that could happen. We need to ensure. Now it happened to me once, where one of the customers were negotiating with us long time back, and at the same time he has gone to another bank, right? So luckily we filed a priority notice, and he has somehow mortgaged to the bank, the other bank. He gave the original to us, but he has taken a duplicate. Those days the practice was, if you have a duplicate copy or the duplicate of the transfer deed with the title insurance, those banks used to take. So that bank has taken the property mortgage with the title insurance, and that mortgage was executed prior to us. Luckily, when we execute our mortgage, we got the priority because we have filed the priority notice. But subsequently, we informed that bank, and customers forced to settle because, finally that bank is getting a duplicate, the secondary liability, and at the same time, this was mortgaged to us. So customers are very smart, though the bankers are not smart. They know our weaknesses, and they will.
What I suggest is, when there is a facility which is, which has undue delays of, executing mortgage from the day that they have done the research. So what we do is, what we recommend is to get a latest last entry prior to doing the mortgage, prior to execute the mortgage. So that is also a good suggestion.
The point is not getting the. No, the point is, without filing the priority notice, getting the last extract will not work. Now, for an example, now once you tender a document today, it will take at least 1 or 2 weeks to register in the books, right? Now today you go to do a search and you see everything is fine, no last owner is there, but there can be another document which is in the pipeline to get registered, right? So you take the document. That is the risk. But if you file the priority notice and before execution of the mortgage or releasing the funds, if you get a copy of your registered priority notice, you will get to know what are the subsequent transactions. Because there can be.
Actually, I have not experienced that priority notice filing in our organization. It's a rare occurrence anyway. Now, how about the others, like Sampat Bank and all that?
We do file. We do file. We do file. It's a practice we do. Because now customers are good as far as they're good, but at the same time, they will touch our weak points and they will get the advantage out of. Now, for an example, if it is a small amount, fine. If it is a 500 million facility, and at the same time, if he has done another for the transaction, so that person who purchased the property.
That is why I'm asking, sir. Now, when is there any threshold for, like, certain amounts beyond certain amounts you
No.
all do, or for all the
For all.
facilities you all do?
For all.
Oh. If in
For
case
all.
like if the bank is unable to proceed with the facility due to a certain reason, so that priority notice will be withdrawn, or
No,
how do you
normally
manage
the
that?
fire notice is registered for 7 days, 14 days, 21 days, multipliers of
Yeah,
weeks.
after that will be automatically cancelled. No?
Automatically cancel. So you don't have to worry. So the best would be to file a prior notice for 1.5 months. And after 1 month, you decide whether you are going to, if the customer insists to cancel, you can cancel it,
Yeah.
or automatically it will get cancelled. So there is no damage for the customer, the owner,
Yeah.
because it will automatically get cancelled.
Okay, thank you, sir. Good to know that, because we don't often discuss these things when we
Because
do
you are taking
facilities. Thank you, sir.
unnecessary risk, and not only the bank properties. If you are purchasing a property for your own, right? Because I know when you want to
Yes,
buy a property,
it's a
you
good
will
point. Thank you.
you pump all the monies, you realize all the FDs, and you sell all your assets and you buy. Request your lawyer to
Yeah.
file a priority notice. So then you are securing your priority. Then even after 1 month, the transfer deed goes to the documents, you are secured. So be careful on those aspects, right? So those are key points, because
Thank you,
today
sir.
we can't rely on people, right?
So even we are not practicing that, sir. So at what time do we need to get that signed? Like after sign the mortgage bond or prior to sign the mortgage
No.
bond? How is it?
Now, if for an example, if I'm going to say that I'm going to buy excess property and I want a facility from you, when I come there, you will definitely ask, you need a vendor's letter confirming the price, vendors copies of the deeds, copies of the plans, and local authority certificate. All those things you will request. So at that point, you have to say, look here, there is a requirement of filing the priority notice. Therefore, you prepare the documents in line with the schedules what the owner has given, and you have to send that priority notice for his signature. With his consent, you file the priority notice. So initially, the first instance where you go for the search, this has to be done. So after, if the title is clear only, you will proceed with the rest of the approvals. So first instance, right? Once you get the title, documents, deeds, everything, when your officer is going for the search, at that point, you have to make sure that you file the documents, or even after 1 week is fine. But make sure at the time of disbursement, you have to have the extract for that priority notice. It's a must. After you execute the mortgage, nothing will. That's you are talking about the caveat. Caveat comes subsequently, but here we are securing the priority for your mortgage. So it should come at the beginning itself, even before you approve the facility. Right? You are just filing and get, if possible, try to ensure the priority notice, 1 day priority notice. If possible, try to register your mortgage 1 day for risky customers. If the amount is high, go for 1 day registration. It's available in most of the items. Some have stopped there because of pandemic, but you have those facilities, 1 day registration. It will, the amount will be a little bit high. If the registration is around, we'll say 200 rupees, they might charge 1,500 for 1 day registration. Still, it's worth, because your total exposure will be 500 or 1 billion. Just 1,500 is now, even 5,000 is what, comparing with your exposure. Following same day itself, you are getting the mortgage and the rest of the documents. So don't take a risk. These are not risks that you can accept. If something goes wrong, you are in trouble. Your bank will be in trouble. Okay. Any further questions? Right. The bank should be, yes.
Mr. Senaratna,
Yeah.
any liability towards a lawyer, the legal officer who, say for a third party, a customer, sometimes they bring defected titles. but their lawyer sometimes they clear the title, and also the once we refer to our bank's lawyer, there are some issues in the title. So in
Okay.
that case, any liability towards the lawyer, that sort of situation?
No, unfortunately, under the Sri Lankan law, there is no liability. But if you see it's Australian law, if the lawyer, yeah, the testing lawyer is personally responsible for executing a deed for unclear title. So here there is nothing actually. So
That's so no.
it depends on the knowledge also. Now, if it is a junior lawyer, he doesn't know what are the complications of this title. He might think when the name is there, okay, everything is fine. Sometimes they don't refer to cross references as well. So willfully or without knowing, they can do a mistake. So
Exactly.
unfortunately, then what you can do is you can charge for negligence for not giving the proper guidance. So personally, you can make them liable under breach of contract. But I have not seen even at the same time. If you want, you can report to the Supreme Court and take action to cancel the license. So those are there because finally, why you want to go for a lawyer or a accountant to get a personal opinion. So if whatever the opinion what I give it to you is wrong, I'm personally liable. So you can take me to courts, and if you have to prove that I was personally negligent or I willfully did this, it's a criminal type of a liability. So I can't say that there is no liability, but for you to proceed, you have to proceed it. But now you have to prove that I have done this willfully or due to my negligence. So all professionals, they are responsible, but the question is how far people will take action, how far people will go. Now under Australian law, they will lose their license and everything. It's a huge claim. But simply, if I'm executing a deed and if I fail due to my negligence, I have a responsibility towards that. How far you can go is the question from a practical point of view. Okay.
Okay, thank you.
Any other questions?
Yes. Sir, now this for the leasehold properties, we usually get deed of postponement, prior to do the mortgage. How does it work? Or can we, execute the mortgage bonds without the deed of postponement? What is the impact if we not executed the deed of postponement?
Yeah. So what you're trying to say is there is a building that in that particular building they have
Already leased.
leased. Okay. So you want to get the priority for this your mortgage. So
Yeah.
without
Yes.
postponement, if you try to register your mortgage, you will not get priority. Your mortgage is valid, but there will be more priority for the lessee. So definitely you have to register a postponement with that particular two parties and ensure that you get the priority for your mortgage. Otherwise, your mortgage will get less priority than the lease. So then it will be very
Is there any
difficult. Yeah.
is there any alternative way of doing it without getting the priority? Say if the property is then leased out to a bank or a institution, some institution they actually don't sign the deed of
Okay.
postponement. They are reluctant to sign. So
Okay.
sometimes we are facing problems.
Yeah.
Can we take an affidavit and go ahead in a such situation?
Yeah. The point is now the lessee will say what your concern is. Lessee is a bank. Now you want to lessee is X bank. Now you are working for Y bank. You want to mortgage this property and proceed. So X bank lessee or the lessee says no, we can't sign. We want priority. The question is where now the so then the obvious lessee will get priority than you. But at the same time, if the lessee is a reputed bank, they can't acquire, no, they have not given any facilities, no. But you have to be a little bit careful if they consider along with the lease another facility, which they can couple with the previous lease, and they can try to get a priority over that. In such an instance, you are in trouble, right? So at the same time, if the bank is a reputed organization, and normally all the banks are reputed, but now if you go for the subsequent registration prior to the lease, and there is no impact at the same time, if the lease is about to expire next January, it will get expired. So you are in a period of another 10 months risk. So simply, if you don't get the priority, you will be considered subsequent. So the point here is where when you want to go for ejectment, in case if you go for parate and if you go for ejectment, the lessee will get more priority. They will.
So actually, practically, I had a situation, and we have that particular property. We have mortgage. So after the mortgage, there was a lease agreement with the bank. Then we wanted to, enhance the mortgage bond. So then that particular bank, didn't want to sign the deed of postponement.
Okay.
So there was a practical situation. So then I referred it to the legal authorities, and somehow got the approval to go ahead with that facility, since the customer is a very reputed person.
Yeah.
So in such scenarios, what is the best advice that you can give?
Yeah, so we need to put little bit pressure to the customer to request, because you can't put the pressure to the bank, no, right? You need to request the customer to put pressure to get their signature, because otherwise, there's no way out, right? So either you consider the customer's credibility, and you consider, because banks normally, what happen here, when you rent to a bank, they will stay for a longer period. They will do all the interior according to their organization brand name, brand work, and they will change the whole pattern. But at the same time, sometimes you have considered that lease rental also for the income, right? So when you're considering the income of the customer, you have considered the lease rental also for the income. So in certain instance, sometimes you will have problems, no, because you have considered the lease rental and you are trying to give a further facility, and now you say, okay, we want priority. So the bank, as you said, the bank not allowing you them to or not signing is also from one angle. You can't say it's not fair, but at the same time, then finally the hit will come to you. You will have to take the risk. Either you can request, no, we are not going to give you a further facility unless you get the bank signature, right? And there are different options. One is that you put pressure to the customer to get the signature from the bank, or you can say we are not going to give this facility. Third option, while understanding the bank and the customer, their credibility, you can proceed while taking the risk, because primary is with you, right? So primary is with you. Only thing, there will be a practical difficulty for you to eject them from the property, because their lease is subject to your second mortgage. So there will be practical problems for you anyhow. There is no other way out unless you get the consent from the customer, and you get the priority for your mortgage bond. So it's a amicable type of a settlement. Understanding, it should go with the understanding. There is no, legally there is no solution for that. Okay.
Right. Thank you.
Right. Right. Then we'll continue. The bank should be able to obtain a safe, unquestionable title without undue trouble or experience. The value of the security should be readily ascertainable and reasonably stable over the years, providing sufficient margin for depreciation. Any security subject to frequent wide fluctuations in price is unsuitable. So share prices going up and down, it's not suitable, because you are taking unnecessary risk. A property, our understanding is okay, the property prices are increasing. Vehicle, it has jumped. Now, if today, if you are going to lend against the vehicle mortgage, you have to be very careful, because today the vehicle prices are very high. You can't even believe. For a newcomer to purchase a vehicle today, you can't buy because they have jumped like nothing. Now, if you consider today the vehicle prices and if you give a margin even 60%, if the regulator start importing vehicles, it will come down drastically. Then sometimes your loan value will be higher than the vehicle value. So that is an area that you have to be a little bit careful. You are taking a risk there. But therefore, be careful on that aspect. And also the shares. Sometimes the share prices are increasing like nothing. So if you touch at the right top place, and if you consider facility, when it drops, sometimes the value will be less than your loan value. So then the customer might say, you do whatever you want, I'm not going to pay you a single cent. Right. Bank should incur no liability to third parties arising out of its title to the security. The security should be readily realizable in all conditions. So if you take a property, it's not easy to take. Identifying the title is a problem, right? When there is a default, quickly converting into cash is also a problem. You check with your recoveries and see how many properties are there where the bank has failed to sell. You have acquired and it's very difficult for you to sell because there is no buyers to buy. Now today there is an artificially created boom in the construction field, one aspect. There is an artificially created boom in the construction condominium properties also. So if you are lending for condominium, a little bit careful. It's an artificial, for me, it's an artificial picture, right? So everyone is showing, okay, there's a boom in construction. Now fundamentally think, how can you have a boom in the construction field where you don't have cement? And there is no standard price for cement. Cement price is around 1,300 odd. But today the cement price in certain areas, it has gone up to 1,850. You don't get a receipt for cement today, right? And one aspect, we have a dollar crisis. So the government has restricted all imports. Simply, we don't have oil. So in certain instance, importing raw materials for construction is a question. Now, very recently, the aluminium bars for aluminium doors, it was increased by 28% from 8th of February, right? So there is a problem there. Importing electrical items is a question, lights and fittings and those things. Now, when the raw material prices are increasing, how can you have a boom there? I don't know whether the condominium crowd is creating a boom to show there is a huge market and we want to go for construction. And fundamentally, I can't see there is a boom. And now what has really has happened, people who have stopped their work halfway, they have started their work. Now, if you have certain renovations, you have start. If X is having to have another additional room, he has also start. So then artificially created demand is there, and the intermediaries, the intermediate seller, they are creating this manipulation and they are putting prices up. So this is what I can see in the development market. Be careful. There are a lot of properties, condominium properties where they have sold. Even the rent income has gone down. So if there's a huge demand, you should be able to rent, no? Rent income has gone down. The apartment prices have gone down. Renting point of view. So be careful when you're accommodating for customers for apartments. You need to ensure what is the right price unless you have a reason for that. Now, recently I heard that one of the leading construction, not prime land, the homelands, they are building a apartment in Vadua, and it's a different model. It seems that all restaurants will be handled by foreign parties, foreign restaurants, and the sea view apartment, just one room apartment is around 19 million. 2-room apartment is 29 million, around 30. Just imagine, 1-room apartment, they are marketing the sea view in a big way, right? Whereas there's a condominium property in Colombo 7. That property, it's a 2-room bedroom. It's around 50 million. So rather than buying a property from Vadua for sea view, buying a property at Colombo 7 for 50 million, it's really worth. No, finally the property is in Colombo 7. No. So just understand, this is the market. It's a very artificially created market. I don't know, people, they buy. So be careful, especially if you're accommodating, you have to be very careful. For me, it's very artificial because nothing is going in that path. Everything is increasing and there's a huge shortage. And how can you start construction? At there are certain projects where even they have not start piling. And the customers you will release bank loans. There is a doubt whether we will be able to import stuff. Now, for an example, if the government take a decision, if the central bank says for 1 year we are not going to import any construction material, what will happen? There's a risk. So be careful when you are lending for new construction. If it is a older constructed property where the already the property is existence, then there is no problem. Because then automatically there's a value. It's completed. But halfway completed startup companies, when you are lending, be careful. Looking from the fundamental point of view, there's a risk. Because we have a lot of crisis, no? Even now, most of the power stations, they are closed because we don't have oil to import. So in certain instance, if the government says, no, 1 year we are going to stop, now they stop importing cars, no? So similarly, if they take a decision, the construction, it's very difficult to stop construction business. It will affect the entire country. Everyone will be affected. Because today, construction business is moving. But depending on your crisis situation, you have to take a call. So if that happens, then you have to be careful. Right? So that's something that I see, because every 4 to 5 years, you get a bubble in construction. Right? As well as the condominium. So this is a time that this could happen because of this dollar crisis situation. Right? Any questions? Okay, so different types of charges and collaterals. Lien and set off. You get fixed deposit, cash and treasury bills. Third party securities, example guarantees, personal guarantees, joint and several guarantees, joint personal guarantees, corporate guarantees. Mortgages, stock mortgages, vehicles, share, property, assignment of life. So these are the charges, and these versus the collateral what you take from customers. Right. Now bankers lien. I think this is a right available for bankers. You can hold. Now if I say, okay, hold my fixed deposit and give me a loan, you will do that. So it's a right that available for a banker, right? Bankers have general lien on all securities deposited with them by a customer unless there is an expressed contract or circumstances that show an implied contract inconsistent with the lien. Bankers' lien has been recognized by the judiciary. Lord Campbell's judgment in the case of Brado versus Bennett is cited in this regard. Banker must undoubtedly have a general lien on all securities deposited with them as bankers by a customer unless there be an express contract or circumstances that show an implied contract inconsistent with the lien. So you can hold everything unless you have a contract to say, no, you can't hold this. Right? But at the same time, when you come to set off, I will explain. Bankers have a right to set off. But most of the local banks, we don't exercise. But foreign banks, if you take UK, they are one of the main rights is a set off right. Now, there are certain advantages in lien, disadvantages. Lien against cash is very good because you have taken a gilt edge security, number one security or gilt edge security, but hardly you get loans against fixed deposits, cash, right? And sometimes you're out of your total portfolio, that will be a small amount. Now, a small out of the box topic. Now, as bankers, do you have savings? How is your savings as a banker? Kumudu, how are you happy with your savings? Don't worry, I'm not going to ask the amount of savings.
No, no. Actually,
Not
I
happy.
have no savings. I have invested everything in properties.
Excellent, excellent. That's good. Okay, Tamara. Are you happy with your savings? That's the question. Don't worry, I'm not going to ask anything further.
Yes, I am happy.
Okay, good. Krishanta? Krishanta, are you happy with your savings? No answer from Krishanta. Right. Kalpa, are you happy with your savings?
Yeah, of course.
Yeah, okay. Madhuranga? Madhuranga is silent. Nadika? Omali?
Yes, sir, I'm happy. Yes.
Omali?
I'm happy, sir.
Okay. Tanuja?
Yes, sir.
Okay, that means if I want a loan, I can borrow from you all, no? Yeah, the question is, well, now if you are keeping money in cash form, I don't think there is any value in that, right? So the depreciation is there, rupee is going down, inflation is increasing. So what is the value of your rupee? So I think Kumudu, you have taken a right decision investing in properties. Some might invest in shares, some might invest in, recently in the morning I had a session. That boy was telling that I'm planning to invest in cryptocurrencies. Right? So some were there who have invested in properties. So I think my advice is where if you have a lot of deposits in the bank, try to convert those deposits into properties or some assets, some valued assets. Because normally the property values keep on increasing, but make sure that you do the invest in the right place. Otherwise, there won't be a value, right? Now, I have a small practice which I have done doing this for a long period. Now, when I want to collect something for a longer period, what I do whenever I get a bonus or something, now what normally happens when you get a bonus, we sometimes we settle our credit card or we settle a loan or something. So then the bonus is following day, the bonus is over. Now, what I used to do is I will put a fixed deposit, and against the fixed deposit, I will take a loan. So normally the loan will be for 5 years. And I will settle my whatever the outstanding, and finally this loan installment will continue for 5 years. So after 5 years I will have this deposit as well as I have done my action as well. So through this, because when you take a loan, you have to settle loan. So annually you might get an increment. For that particular increment, you will fix this loan installment. And continuously after some time you will get some collection of your deposits. So then you have a bulk amount. By using that bulk amount, you invest in buy a property or something. So that is a very workable method that I have experienced. But with certain commitments now it's a little bit difficult. But for you can start that. Right? Just put a fixed deposit, again the fixed deposit, get a 5-year loan. So you are just paying 2% or 3% margin as an employee. So finally you are paying to your organization, no? So not for any other organization, no? So then you will save your deposit after the 5 year. Your matter is also sorted, and you will get adjusted to from the salary to pay your installment. Then the problem is over. So just try that and see. I think I have got a lot of advantage out of that, because we intentionally, we don't save. Whatever you get, you spend. Personally, me, I don't have a savings habit. I do spend lot, but for a rainy day we had to have something. So this is how I collect things. If you feel that you can't pay the loan, you request the bank to uplift the loan and settle that outstanding. And if you want a amount that you uplift, settle the loan and get the balance. So no harm done. So just try that, because I have that experience. I have got a lot of advantage out of that. That's a compulsory way of investing, and also a life policy. It's also a good method. You can get exemptions for your taxes also. All you pay, you can get a reduction for tax. Okay, good. Any questions? No. Now this set off is also a right available for bankers, but unfortunately bankers are not exercising that. Now, for an example, if I have 2 accounts in your bank under my name, one is at Bambalapitiya, the other one is Dehiwala. So my Bambalapitiya account is overdrawn balance. Dehiwala one is a credit balance. So the Bambalapitiya manager keep on requesting me to settle the loan, but I'm not doing that. So you know that there is a credit balance in my Dehiwala account. Without informing me, you can set off that money, but make sure both accounts in my name. You can't have one joint account and one single account, individual account. It has to be both in my name. Where there has a credit balance, you can set off with the OD balance. So that's a right. But UK banks, they exercise this as a right. But unfortunately, Sri Lankan banks, they don't exercise. What they say is, without informing the customer, you can't do it. Once you inform the customer will not keep money. Right? They will somehow take the money out. Because I have experience sometimes. For those days, the banks, they used to give some tokens for Urdu deposits. Right? You deposit 25,000. A bank will keep a hold, lien, and for that you will give a token. So there are certain customers, once you deposit, right, they take the token, and on their way home, they withdraw the money before you put the lien. Right? So in such an instance, that's very pathetic. No, you believe that the customer is a good customer, that is loyal customer. He take the token and he withdraw the money and he go. So that's that type of customers are there. So once you inform the customer, look here, we are going to set off, he will withdraw the money. So then you will not be able to exercise the set off. Also, in case of a fixed deposit, you will request the customer to get the set off. In case if I'm not settling, you can use the set off to recover, as well as in case of a third party deposit. Sometimes you will request for a third party set off to uplift and recover. So setup is also a method that you use to recover outstanding. Any questions? Right. Now, when you come to guarantees, what do you mean by a guarantee? What is a guarantee? Yes, what is a guarantee? Can someone tell me what is a guarantee? Yeah, it's a secondary type of a liability. So I'm taking a facility from your bank, X has signed as a guarantor. So if I fail to pay you the loan, you can recover that from X. But understand, my capability and the guarantor's capability should be the same. So guarantor should have the same repayment capacity similar to your borrower. But unfortunately, bankers, sometimes they select big people from the community, reputed people, not considering their income. School principals, retired teachers, don't ever take any of the retired government officers as guarantors, because we need to protect them. Now they get a small amount, maybe they are small pension. And top of that, if that is not adequate for them to take the medicine, and top of that, if you are going to pass a responsibility as a guarantor, that is not fair. That is not fair banking. So maybe that they are willing, explain them, look here, this is what happened. So most of them, they sign without knowing the repercussion. So you have a responsibility as a banker, reputed banker, as a loyal banker, to explain them, look here, when you sign as a guarantor, in case if this person is going to default, you will have to pay. Sometimes the guarantor's parents will come and sign because of the undue influence from the children. Your father is guaranteeing the son's facility because the undue influence. So that's also unethical. It's not unethical, it's illegal. From the time you get the signature, the contract is not valid. Undue influence, duress, right? So make sure that you don't get a guarantor who is a retired employee, especially a government sector, because they sign without knowing the gravity. So it's a secondary obligation. In case if I'm not going to pay, only X will have to pay. This is a personal guarantee of third parties and most common form of security in the bankers lending. So bankers, they prefer to get these guarantees. And guarantees can be personal, joint and several, and corporate. Personal means individual guarantee, I'm signing. Joint and several means A and B has given us guarantee. A and B will be jointly or severally liable. Jointly A and B together. Severally means if A can't pay, B have to pay. If B can't pay, I have to pay. So that is called the several liability. So if you have more parties signed as a guarantors, so then you're spreading the liability. You're not depending on only one person. You're depending on all the parties. Now that is why sometimes the bankers, they insist on a joint and several guarantee of the directors. So then automatically all the directors will be liable for that. If A can't pay, B will have to pay. If B can't pay, C have to pay. So that's a strong security. And now for an example, if 4 directors were there and you have stated directors joint and several guarantee and only 3 directors have signed, then what happened to that particular guarantee? 4 names you have typed on, but on the last page only 3 has signed. The facility is 100 million. What will happen to the guarantee? Can someone tell me what is the impact of the guarantee?
Null and void, no?
It's null and void. Even those 3 who has signed, you can't make them responsible. There's no value at all. It's zero effect. Because due to your negligence, you have not taken the 4th signature. So others are not responsible. They might say, look here, we thought that we are going to share, all of us. You have not taken a signature. Even for that component, they are not responsible. So be careful, right? If you want to mentally create a pressure to a customer, you can get the guarantee, but make sure that you get the right signatures of all parties. And before giving the facility, you have to get the signature. Most of the time you think, okay, the facility, sometimes the customer might say, no, this guarantor has gone abroad, I want the facility. So in order to accommodate the customer, you give the facility and the guarantor will come and sign on the later date. So when you claim, guarantor might say, look here, I signed this particular guarantee on this date. I have proof for that. You have given this facility on a prior date. I'm not responsible for this, which might exclude the other parties also. So then you have given a facility without security. So be careful. The execution steps are important. Offer letter should be always prior to, offer and acceptance should be prior to the grantee. So there can be certain instances where offer, acceptance, consideration, signing documents can happen on the same day. Then that's fine. In case of a loan against fixed deposit, everything will happen in the same day. But you can get the documents and you can postpone the consideration, crediting the account, but it should not be the other way. If you grant the facility and if you're going to get the documents, you're in trouble. So don't let happen that, because these are the weaknesses that we were identifying when you come to documentation. Everything is, you have started the entire process after giving, because you are sure about the customer. Maybe that you are sure about the customer, but still, if you're taking documents, you have to have a process. Either you rely on the KYC of the customer, and without security, you give the facility. Then no problem, right? But if you decided to have a proper set of documents, it should come first. Based on the KYC, you consider the facility with documents. As soon as the documents are signed, only you can proceed with the credit. Otherwise, you are not supposed to do that, because you can't hold in front of courts, because your documentation process have a lot of lapses. So you will not be able to prove that. Even the opposing party will object. Especially after my retirement, I thought of taking all the bank cases from the defendant point of view, because I know all your mistakes. So it will be very easy for me to challenge and contest and win the cases, because I know all the mistakes done by the bankers. So be careful, right? I'm giving prior notice and to say that I'm going to go to courts after my retirement. It will take another few years. And I'm going to take all your bank cases other than Sampath Bank. Right, any questions? So most advances in this country are secured by personal guarantees, even where tangible securities are obtained. Sometimes you might take, okay, you have a security, but you say, why not give a personal guarantee of the directors? So the question is where, now if you are not, why you want to get a personal guarantee? Because you are not sure about your security, no? Because there can be, at the time of realization, sometimes you don't get what you want. That is why you are leaving a room. Okay, guarantors you give, directors you give the guarantee. So there are a lot of advantages and disadvantages. I'm not going to discuss those here. You just read it. Right, that's your homework. Now, difference between guarantees and indemnities. Can someone tell me what is the difference between a guarantee and indemnity? Yes? Difference between a guarantee and indemnity? Umali?
In guarantee, a third party is giving the assurance against the obligations.
Okay.
In terms of indemnity, the person, who's taking the loan, for himself, he's giving the assurance.
Okay, you justify from a practical point of view, but that's not the real answer. So guarantee is a secondary liability, where in case if X is not going to pay, you will recover from Y. So Y is the secondary, while he'll have a secondary liability. In case of indemnity, right, whether X is going to pay or not, Y will have to pay. So you don't have to go behind X, you can straight away go behind Y. Now the question is where, now you take indemnities. What are the instances that you take indemnities? You take indemnities from the customers? Yes, Omali? Do you take indemnities? Kumudu?
Yeah, overall counter indemnity we obtain.
Counter indemnity, that is you are talking about for e-signature indemnities, no?
Also, with regard to facilities, overall counterparty counter agreement.
Indemnities from the directors?
Yeah.
Okay. Right, okay. Now, why are we taking guarantees? Why can't we take indemnity then? I don't know what is the basis that you are taking that counterparty indemnity. Now, the question is where I have taken a facility and I can't, if Y is giving an indemnity, you don't have to go behind X. You come behind me, I will pay. Law will not permit that, right? Because the person who have borrowed must pay. because the benefit came to me, not someone else. So that is why always when you come to practice, the bank, the borrower has to pay. In case if the borrower can't pay only, you can claim that money from the person who has given the guarantee. Now indemnity is what we take. We take indemnities, but in different, only limited instances where if you are giving a letter of guarantee or um, bid bond, performance bond, because at the request of the customer you issue a letter of guarantee. So banker must make sure that you have to have a create a direct liability for the customer. So in such instances, you say you give an indemnity for this letter of guarantee. So if the bank has to pay honor the letter of guarantee, the customer is personally liable for that. But in practice, we don't get what you call the indemnities for facilities, because it's a responsibility of the party who has borrowed. So maybe that Umali that you are using it, because it may be the directors are the people who have working in that company, right? And directors are the shareholders. But I doubt whether you will be able to get this kind of indemnity from a listed group of directors, the listed company directors. They will say no, we can't give, right? However, if it is a private company where I'm the director, I'm the shareholder, I'm the key person behind the company, chances are more that I will sign, because finally I don't have any option. No, I will sign and I will give my indemnity. So other than normal practices where you don't get the director's indemnity, you get the director's guarantee. So have you tested this in the court of law, Mali, or is it something that yet to test?
We haven't like gone to the court
Tested.
and yeah.
Yeah. The question is where now normally we say directors and the company are two different legal persons, right? Under law of privity, it says the person who formed the contract is responsible for his liability, not someone else. If you have taken action against me, I'm the person who is responsible. You can't make another person responsible. So one can argue, no, that company is the one who has borrowed, not the director. Right? No, director shareholders are not separate from the company. That's called the veil of incorporation. Right? According to the veil or the protection, directors, shareholders, and the company are two different. So just you might just see what is the Umari, just revisit and see, because and ensure that you are in the right track. Be careful, because one can argue you think that better rather than taking indemnity, if the process is focusing on a requirement of a guarantee, better you take the guarantee, because you might think that your documentation will be strong, and just check with some legal experts and see what is right, whether the joint and several guarantee or the indemnity, what is strong from your point of view, because you need to clarify, because otherwise if something happens, if the court says the indemnity is not relevant because it's due to veil of incorporation, directors and the company are separate, then you will not be able to exercise on your indemnity. And since you have not taken a guarantee, you will not even able to pass the secondary liability for the director. So be careful on that point. Just revisit and see, maybe that you
I'll
have a
check
reason.
with our legal department, sir.
Yeah, because I can't see any basis for that, but be careful just to revisit your process. Maybe they have strong grounds, that may be the reason that they have advised you all to take it, but just revisit and see. Okay, any questions? Now, discharge of guarantees, discharge by the payment. Once the payment is done, you can't use that guarantee for another facility. So I have signed for 1 million of X. If once the X has paid the full amount, you can't use that guarantee for another facility, right? Without my consent. So sometimes banks, what they do, they use the same guarantee for a revolving facility. Initially, you took my signature for a fixed facility to payable in 5 years' time. Now, payment is done, you are using the same for another facility. You can't do that. and you can do, but I'm not responsible. So you're in trouble. Either you get a letter from me, I have no objections to use the previous guarantee. Better you take a fresh guarantee. Then you have a control over that. Discharge by release of the principal debtor, discharge by material variation of principal contract. So the contract is variation different, then you change it. Variation in the guarantee, terms variation, you will then your liabilities will be over. Discharge by a change in legal position of the parties. Earlier different partnership, now new partnership. So the legal position have changed. A company name has changed. So be careful when you're taking guarantees. You have to ensure that you get from the right person. And also, especially if you're taking a corporate guarantee. Now we'll say you're lending for a subsidiary and the parent company is going to give the guarantee. You're lending to the subsidiary and the parent company is going to give the guarantee. Now, what are the documents that you have to check there? What are the documents that you have to check? You are lending to the subsidiary against parent company corporate guarantee. What are the documents that you have to check before you proceed the facility? Yes? Anyone can contribute there? Tanuja?
That company financials and the asset declaration, and whether that company have given guarantees to some other companies.
Okay. So do you check the articles of the company?
Yes.
So you need to check the articles of both companies. Subsidiary company, you have to check and ensure that they can borrow against a third party guarantee. At the same time, the parent company, you have to check and ensure that they can guarantee a third party company, including a subsidiary. So unless you cross check these two documents, if those two documents are not in line, you're in trouble. Because you have taken a guarantee without checking whether they have the authority. Right? So still simply they can't execute that. We are saying it's an ultra virus transaction. There is no authority in the articles for them to sign a corporate guarantee, whereas they have done. So it's null and void from the inception itself. So you think, no, we have a corporate guarantee. And at the same time, be careful. If it is a 100% owned subsidiary, we call wholly owned subsidiary, 100% owned. If you're giving for a subsidiary, you have to get the parent company's guarantee. It's a must. The reason, parent company, without informing you, even without informing the subsidiary, they can pass a resolution and close down the business. So you have lent to the subsidiary, you don't know, even the subsidiary directors, they know, no? Parent company has passed a resolution and closed down. So then who is going to take the responsibility? If you have taken the parent company guarantee, you are secured. You have a control, then you can put the responsibility to the parent to say, look here, you close down, you have given the corporate guarantee, we want the money from you. So please make sure these are small things, but it's very important because through a company, they can default like nothing. You are in real trouble if you don't understand the nature of the companies and their behavior and the legal principles behind the companies. They can do magic. Unfortunately, bankers don't know the legal background, how to handle companies, because you think when a company accounts are very important. Yes, company accounts are very important, but company accounts are the loss-making companies. If you think about your top 10 customers, if they bring volumes only, you will get a profit. But just think about the top 10 customers exposure. Most of the time, your 60% of your total exposure is with them. If this top 10 customers default, what happened to your total exposure? Your NPL will go 20-25%. So most profitable customers are the small customers. But we don't understand top customers without much profit. We are playing to their terms. Small customers, their profitability is high because they agree for your price. And the risk of a small customer, defaulting of a small customer is less. So you saw when the construction bubble came in 2018-19, where most of the construction companies defaulted, where the payments from the government was not came to them. Majority of your NPOs were because of the construction companies. So you need to be very careful, right? When you're dealing with companies, you might think this is good to get a company account, but at the same time, you are taking a huge risk. Right. Guarantor's right to recover from the principal. So I'm the guarantor. Excess not paid, I have paid that money to the bank. After I pay that money to the bank, only I will get the right to take action against the customer. Because it's an agreement between me and the customer, nothing to do with the bank. I have given a guarantee to the bank in case if this borrower, customer can't pay, I will pay. So after I pay, only I will get the right to take action against the customer and recover the outstanding from him. Right. Any questions? Okay, we'll take a break. Take 20 minutes and return back. So now the time is 3:32. Come return back by 3:50. 20 minutes, and we'll continue with the rest of the points. And if you have any questions, please raise this, because this is one of the important topics for your documentation, your security. Because we earn a lot of money through lending, but unfortunately our documentation have a lot of weaknesses. So whatever the practical problems, just throw it to us. I will try to give whatever the possible solutions. Don't think that no one will go and share to say that this bank is doing this, because there is no interest of any of us. So try to sort out your problems, practical problems. That's important. Okay, then we'll take the break. Thank you. Now, what is a mortgage? Definition: a legal agreement by which a bank, building society, etc., lends money at interest in exchange for taking title for the debtor's property, with a condition that the conveyance of title becomes void upon the payment of the debt. The properties which could be mortgaged are movable and immovable. Now, what is the definition for movable and immovable? Can someone tell me, how do you know whether this is a movable? Definition on movable? Yes? So the definition on movable: any asset that is permanently fixed to or any asset that could be removed by using a nut and bolt, or which is fixed by using a nut and bolt, and once the nut and bolt is removed, we consider it as a movable item. So any asset that you can take from one place to another place, we consider it as a movable. And any asset that is permanently fixed to the structure of the ground, we consider it as a immovable. So there can be machineries which are fixed permanent to the structure. We consider not only the machinery, the property also as the security. So then it will come under immovable property, though you're more focused on the machinery. So large printing machines are permanently fixed to the land. They have put concrete and it's permanently fixed to the land. So if you're mortgaging a large printing machine, you have to make sure you not only mortgage the machinery, you have to mortgage the land as well. So that's a simple definition. So there are different types of movables and immovables in this system. So we have to be a little bit careful on that when you are taking movables, because through movables mean it's moving. So you don't have any control, but immovables means it's fixed. you know that land will be there, but stocks can move out, machineries can move out, vehicles can move out. So holding an entitlement over the movable it's very risky, right? So when you come to movables, there is a requirement to create the charge against the movable, a properly executed mortgage bond. So the properly executed means it's a little bit detailed explanation. You have to get you have to type properly with correct information. You have to get the stamp properly and get the signatures at the right place. And once you complete that exercise, you have to register within 21 working days with the Register of Lands. So that is the process that you have to follow when you are mortgaging a movable. So if you fail to follow any of these important actions, sometimes you will have problems with regard to the execution process. So the opposing lawyer can object against your property or your process what you have taken, and they might say, look here, you have not followed the proper process to execute the mortgage. So then they can find weaknesses, and as a result, sometimes you will not be able to win the case as well. So be careful when you're taking a property, movable property, as security. You have to follow the correct process. If you fail to follow the process, that's going to be a defect of your defect in the process, which will lead to where you will not be able to win the case. So be careful on that particular aspect also. Now there are advantages of movable as securities. When goods are mortgaged, turnover is faster and repayment could be on the short-term basis. If the borrower acts in good faith, movable should be good security. Since bank has the insurance on movable, in the event goods are destroyed, insurance is paid. In case motor vehicles and heavy machineries, they have distinctive and identifiable number. So there are a lot of advantages. Since if the customer is genuine, no problem, you will be able to get. You will have the insurance. If something happens to the vehicle or the movable, you can get the insurance claim. Since most of the movables will have distinctive numbers, as a result, identifying those also will be easy. So there are a lot of advantages than disadvantages, but there are a lot of practical problems also. Now, valuation of the goods fluctuates with the market condition, right? Where it can go up, it can come down, right? There is no, now if you take the vehicle, prices have gone up. So then what is the assurance that it can remain for a longer period? So if you are going to lend today, then you are lending at a higher margin, high rate, high percentage. So then you will have problems. Fundamental borrowers may dispose of such items without reference to the bank and misappropriate funds. So once you get the mortgage, what you have to understand is where you will be the mortgagee. You don't get anything else, right? For you to exercise your mortgagee's rights, you have to go through the legal process. So unfortunately, if until you get the judgment in favor, you will not be able to exercise your rights. So by that time, the customer can do so many things. I'm a customer, I can sell the property. I have stocks, I sold the stocks. I had few machineries before you came, I sold them. So unless you had to ensure that you put one of your security guards in my premises and protect that. Most of the time, when you get the red light to say this customer is bad, he has sold all the assets. So you will have an empty warehouse for you to protect. Nothing will be left. In practical sense, nothing will be left. So this is a real concern that we see when you come to machineries. So when you come to movables, as goods are not readily identifiable, it is difficult for a bank to trace such goods in the hands of third parties. So now, for an example, I'm an importer of, we'll say, rice cookers. So how am I going to identify my rice cookers? Do you have a serial number? No serial number. I can just easily sell it to someone else. You don't know. Without informing, I can do that. You can't trace from the market. If it is a vehicle, of course, there is a distinctive number. But goods like rice cookers and small items, it's very difficult for you to trace. And the market fluctuations, deterioration of quality, and sometimes perishable items are mortgaged. Where the perishable items are mortgaged, you can't keep for a longer period. So you have to take quick decisions. We can't get the quick decisions because the court order will take years and years. And also you can't get the priority over movables. Immovables, of course, you can get the priority. Once you register at the land registry, you can see the name. But movables, you can't get the priority. So these are some disadvantages, but in the long run, these disadvantages are very strong. In a practical perspective, to realize your liabilities, you won't be able to realize because of these practical difficulties. I will take some further practical difficulties on movables. Just 1 minute. Okay. Now this life insurance policy is also a very good security. Now what you have to understand, and it's also an investment as well. Now sometimes you might think whatever the amount that you pay, you are not going to recover. That's fine. Don't worry about the recovery, right? But you have to be worried about the benefits what you are going to get. In case if something happens, you will have this security where you will be able to recover something from that. So always understand it's very important for you to have some kind of a cover. In case you require, it will give benefits. Now insurance policies are good securities. Why I say it's based on, because once you form the contract, it's based on uberme fide or utmost good faith. So both parties will have to disclose all material factors, and based on the material factors only, the insurance relationship will start. So once the insurance relationship is started, thereafter there is no problem. But in case if the insurer says, look here, this person has not given the true information at the time of forming the contract, then there will be a time that you will not be able to get a single cent. Now, for an example, customer suicide, where you have taken the insurance policy, but if they have confirmed the surrender value, then there's no problem. Whether the customer suicide or not, still they will have to pay the surrender value. But just you need to see, in case of a suicide, whether the insurance company is going to pay at least the surrender value. So if that is not the case, you will not get a single cent. So other than that, insurance is a very good security because we have a better control than us. In case if the customer is defaulting, you can request the insurance company uplift and send us the money, or not to uplift, send the surrender value. So then they will pay the surrender value and your facility is secured. So please, if you have the chance of getting a policy, it's important to have insurance policy, which is useful for because as a security, plus as a in the long run you will get a benefit out of that if something goes wrong. Now vehicle mortgages is very common, but vehicle mortgages are also common security accepted by banks. Now there are common issues, right? Now we'll say the take the control. Now, before that, when you are purchasing a vehicle, if you want to buy a vehicle, now before you purchase the vehicle, do you check somewhere? What is your action? Umali, can you tell me, if you are planning to buy a vehicle, what are the actions? What type of actions you take? Yes?
We need to check the condition of the vehicle.
Okay. Check the condition.
Insurance details, existing insurance details, vehicle, the CR book, ownership.
Okay. Then you purchase.
Value of the vehicle, throughout valuer.
Okay. So those are the points. Now, when you are purchasing a land, of course, you will go to the land registry and you check. So when you are purchasing a vehicle, you need to check with the RMB. I know that majority of you are not checking with the RMB because it's a must. Now, you rely on my CR copy, and if I'm going to give, if you come to buy my vehicle, I will say, okay, I have the CR copy, I will give the CR copy. So you think that this is not mortgage to any financial institution because I have the CR copy. That's your assumption. When the person is having the CR copy, this is mortgage, not mortgage to any financial institution. Now, how do you know whether this is the real genuine CR book or whether this is a duplicate? Do you know that there are duplicates of CR books? Sometime back, I'm talking, not immediately. There were duplicates were issued for money. Right? If you want a MBBS certificate, you can get it for 50,000. There are people who print that. Right? So this is a system where you have a lot of duplicates or reprints, which you can't find which one is the original. So you think when I give the CR book, okay, I have the vehicle, this is not mortgage. No, you have to check with the RMB and see who is the real mortgage, or who is the real owner. Because it happened sometime back, this happened a long time back. Roshan, are you joining for the first time? Roshan? Roshan, are you joining for the first time?
Yes, sir. Today I joined.
What happened? Previous two sessions, what happened?
Yeah, I couldn't participate to the early session because I went for an essential work. So.
Okay. Right. So what happened there? One of our those days he worked with us, and he purchased a vehicle. So he before purchase he went to the RMB and he checked the books. So then the RMB books were very clear, no problem. Then he purchased, and then he sent the documents for registration. At that time, the RMB has rejected to say this vehicle is a condemned vehicle, and he couldn't register it. So what has happened, this has met with an accident and it was sold by the insurance company for scrap value. Through insurance, this seller has purchased the vehicle and he has done all the alterations and all the repairs. And he has prepared a forged CR book and sold the vehicle. So at the time when it went for publish the papers, he has given a bribe officer in the register of motor vehicles and taken all the condemned vehicle documents out from the file. So normally when a vehicle is condemned, you include the document to say this is a condemned vehicle. So at the time of sale, he has taken all the documents out. So though he has done a search, he couldn't find that this vehicle is a condemned vehicle. But after the sales took place, the documents came inside the file. So that is why they have rejected registering this vehicle. They told, oh, this is a condemned vehicle. Now, even in that case, the buyer has gone check with the RMB. In your case, you all are not checking. Right? So there's a huge risk. So luckily, his brother was working for Army at that time. he was somehow was able to resell the vehicle back to the seller. There are a lot of vehicles in the market, right? This type of vehicles, and there are a lot of vehicles, but vehicles. It happened to another known party. He has purchased this, and after some time, the vehicle was when he has put this vehicle to for a repair, and the garage people, they have told that this is a bad vehicle. So luckily he was able to get hold of the previous owner, and he also resold the vehicle. So best thing, if you're buying a vehicle, purchase from a known person. Then you have a track record. And before you buy, go and check with the RMB to see whether this the real owner is dealing with you. Right? And don't use vehicles with open papers. Now sometimes maybe that you purchase your vehicle from a known person, your friend. That's good. There's nothing wrong. You have purchased from the friend. Because of that, you are not registering. So still the vehicle is under your friend's name. Right? But you want to reduce one registration in the CR book. Now your friend borrows from X bank. He has defaulted. So the X bank has taken action, and they got the writ. So when you execute the writ, all assets belongs to that person. We go back to that particular bank. Right? So then what happens? Automatically your vehicle, though you have purchased that, it will go to settle the debt of your friend. So this, once again, all these are real stories. It happened to one of our staff members. He has purchased the vehicle for 4 million, but he has not registered. So when the seize order came, the fiscal has told, no, you have to give this vehicle. So he had to file another case in Colombo District Courts to secure his possession. At that time, it happened around 10 years back. He had to file a case where it cost around 200,000 for him to establish his possession, to say this vehicle belongs to me. So be careful when you're using third-party vehicles with open papers. Finally, the owner will be affected. Now maybe that your vehicle you have sold to someone else. He has not registered open papers. He has given on lease. Right? So the person who took that on lease is using to transport drugs. Now what happens? The registered owner is you. If something goes wrong, police will take you to custody. So don't purchase vehicles without checking with the RMB. Don't use vehicles with open papers. If you buy, try to register on the same day, 1 day registration if possible. If you sell, submit your paper, complete the forms, MTS6 and all those documents, and sign, complete it and sign. Don't give it open. And send your copy to the RMB. Then you are safe. And also make sure that you get a full insurance. Sometimes you spend millions and millions, but you fail to get the insurance cover to say that I don't have money. Sometimes you get third-party insurance. So then your millions will go for a 6 if something happens. So you can't predict anything, no? So be careful when you are purchasing a vehicle for your personal use, or if you're mortgaging a vehicle with the bank, you have to follow these steps. Any questions? Any questions? Right. Now the control, ownership control, there's no assurance. So though the CR book says my name is there is no assurance that you can rely on the document to say that I'm the real owner. That is why you have to check with the RME and see whether so-and-so is the real owner. Because you can get a reprint. You can get a duplicate. Sometimes the duplicates and reprints are better than the original. So it's very risky. And the depreciation. So fortunately, in Sri Lankan context, the vehicle values appreciate. If you buy for 4 million, you can sell it for 5 million. Unless there is a prior to 2019, there was a downward trend. So other than such instances, most of the time, your vehicles, you can sell it at a higher price or even at the par after using for 3-4 years. Recovery. It's very difficult to recover because you once you get the judgment after 4-5 years, right? Sometimes the vehicle is missing, or they can give it to for parts. Panchikavatta, you can easily sell your vehicle for parts. They have special centers for to remove all these parts and convert into pieces. So there are different systems in this world. So be careful. And also when you, especially those who are riding bikes, be careful. Don't go in the night. Recently I saw a news item in Sri Lanka. In the night, one person was going in a bike. Two people have stopped him and put him to a side, and they were taking the bike out from that person. So it was recorded in a CCTV camera. So definitely they would have given that to another person, and now it would have gone to Panchikavatta. So don't drive in the night, especially when a vehicle. Make sure that you put all the locks and go. Don't stop for any reason. Maybe that in the night people might come wearing police kits and everything. So it's a little bit risky traveling in the night, especially under today's conditions. Unemployment is very high. People don't have money to live, and they might go for unethical practices. So don't leave room for that. You want to go out, fine, go out, but make sure that you maintain controls. If this is within the city limit is fine, but if you are staying out of Colombo, be careful. So these are the practical difficulties of what we see in vehicle mortgages. So when you're taking a vehicle mortgage, you have to make sure that you get the CR book, you get the valuation, you get the mortgage bond, and you have to register your claim at the RMB to as the mortgagee status. Plus vehicle mortgage bond, you have to register at the duly completed mortgage bond has to be registered at the Register of Lands within 21 working days. So make sure that you get the insurance from a right person. Maybe that you have a valuer. So request the valuer to get a proper valuation, because there are some valuers sometimes when you go and say it's for a bank loan, they will increase the value. There are certain valuers who always put the price down. So it has to be a person where you have some knowledge and who is reasonable, I would say, and ensure that you proceed the transaction. Right. Any questions? Right. Now stocks, book debts, and machinery mortgages. Normally stocks and book debts goes together and machinery separate, but I have taken everything in one topic because the process is the same. Now the danger of these stocks, right? Banks lend against stocks, book debts, and machinery for its customers. Common issues, list of stocks. So it's very difficult for you to understand the list of stocks or to finalize the list of stocks. Now the point is where now when you go for inspection, stock inspection, what is your method? How do you go for stock inspection? This is a spot visit, or do you inform the customer that you are coming here on this particular date? What is your process? Umali, can you add something for that? What is your bank process, or what is your process simply?
For us, there are nominated quantity surveys are there, in-house quantity surveys are there. So like we inform the date and the time that we are visiting the premises to client for arrangement. So then at that time, QS will visit the location and submit us the stock inspection report. The risk is like at the time of visiting, they can like make arrangements to keep the adequate stocks at their locations.
And knowing the risk, you are following the same process, no? Anyone else can share their views? So this QAs are outsiders, or is it your own team?
In-house QS.
In-house, okay. Yeah. Anyone else? Nadika? Nadika, sorry. Anything that you can share, Nadika? Nadika is silent. Roshan? Anything that you can share with your experience? Your bank experience?
Yeah.
Roshan?
So at our bank, normally we are doing quarterly stock inspections. Then actually we also inform to the client prior to visiting customer place, and there's a threshold in facility limits. Upper than the threshold, we should deploy an quantity survey. Other than that, branch manager and the credit officer go and inspect the stocks.
Yeah. Right, that's fine. Now the question is where when you inform the customer that you're coming, you know the customer will arrange stocks. There was one particular known person. What he says is when the bank officers inform them they're coming, he was importing thinner. So thinner, it's just like water. So he was telling me, look here, when the bank officers inform me that they are coming, he keep all the thinner barrels in the front. All rest of the barrels are filled with water. So bank officers, they come and open the front line barrels and they are happy because they can't check all the barrels behind the inside the room, no. And at the same time, he offer them a lunch. Sometimes this transport is arranged by him, and when the officer is coming, he give a token, it seems. So the whole purpose is lost, no. Yes. Sometimes when you inform that you are coming, he might say, don't worry, I will arrange the transport. And if it is a little bit far, he will arrange your lunch as well. So we'll say that he is coming. We'll say he's from area where you get from Ratnapura, or sometimes he might offer you some 2-3 tea packets and honey bottles, 1 or 2 honey bottles. So your whole exercise of independent valuation will not be there, no, because you are controlled by him. You got the refreshment, you got the transport, you got the refreshment, the food, and you got a token as well. So how can you go against him and say that the quality was not there or the required stocks were not there? So it has to be spot inspection. Maybe that your officers will go back and come, but it has to be spot inspection if you are doing a good job. Or else you are allowing him to store, and because you are safe, right? You don't want to show that he doesn't have. Normally, in practical sense, tell me any business, small businesses, where they maintain. Now if I have 10 million worth of stocks, you might say any given time I have to have 5 million. Do you think I can do that business? Do you think that I will be able to keep 5 million stock at any given point? No, that won't happen. In a practical sense, how can you do that? I'm a person who is a small entrepreneur. Whatever the stocks I sell, if I want to keep a continuing process, I will have around 1 million, 2 million. That's max. So knowing the fact and you're asking me to keep for 5 million, how can I do that? Now, if you take Abans or Singer, they will have huge stocks. They maintain, they have around 6 months or 1 year stocks. So they can revolve this. But for a small entrepreneur like me, how can I keep it? So you know that I will not be able to keep. And at the same time, why you inform, for me to make sure that the stuff is available in the warehouse. So that is not the spirit what we are talking. It has to be spot inspection. Maybe that due to some other reasons you all are following that, but be careful. And at the same time, this is the most dangerous part, not the inspection. Now I have 10 million worth of stocks. So your margin is 50%. I will go to Ceylon Bank and I will say, okay, this is the stock that I want. Give me 50%. So Ceylon will take the documents from me. They will take the insurance. So I will bring the insurance cover from insurance corporation. And they will get the stock list and they will credit me. I will go to Sampath Bank. And I will say, okay, I have 10 million worth of stocks. They will also request for the stock list, mortgage bond, and insurance. I will bring the insurance from AIA. I will go to commercial bank, right? Same set of documents, only variation, the insurance corporation is Janashakti. So I can mortgage the same stock for all the banks and get much more higher return than what is available in the warehouse. None of you all can control me, because these are not registered in the these are registered only on movable books, just a ledger. You can't do a search and check whether this is already mortgaged to another financial institution. So your 100% depend on my credibility, KYC, right? So you can't control at all, right? So but if you go for spot inspection, sometimes there may be another officer of another bank will come at the same time. Right? Because you can't ask from the competitor bank to say whether this person has mortgaged your stocks, because then it will be secrecy, violation of secrecy. So then you will have further problems. So be careful. This is the danger that we see. So only way out is where you can get a affidavit from the customer to say that he has not mortgaged these stocks to any other financial institution other than your company. That's the only way out, but it's just a piece of paper. All contracts, agreements, everything, for me, it's just a piece of paper. If the parties are fulfilling in line with the contractual terms, there is a value. If the parties are not fulfilling in line with the contractual terms, there is no value at all. Better you put into the dustbin, because there is no value. Only thing, you can go to courts and prove that I have signed certain agreements, and as a result, I have breached. Now you have a claim against me. That's the only advantage that you have from an agreement, nothing more than that. So be careful when you are dealing with stocks. Most of the time, when you send the letter of demand, stocks are not available. Book tests, they have realized, right? Machineries, they have sold for parts. Or sometimes when the court judgment comes, you can't use this machinery because those are outdated. Now, every year you see new models are coming. If you take the phones, Apple brand, every year they will have a new model. So then the previous model will get outdated. So automatically the prices will get outdated as well. So these are the challenges that we face when you come to stocks and machineries. So you need to be very careful when you're mortgaging stocks. Any questions? And the list of stocks, it's very difficult. In bulk quantities, you can't count or you can't measure. Even an expert goes, sometimes it's very difficult for you to understand. Mortgage is same stock, different banks. As I told you, maintain the stock levels. It's hardly people maintain stock levels. Continuous monitoring. It's very difficult for you to continuously monitor, because these are mobile items moving out and the recovery. You can get the judgment, but when you go back to the warehouse, sometimes nothing is available, or sometimes these are perishable items. Any questions? No? Right. Share mortgages. Limited liability company shares are also common form of security that banks take protect their lending. Banks accept only quoted public company shares as security. So quoted means listed companies. The percentage of advance will vary with type of the shares and the comparatively a higher percentage of margin in the bank's favor. So sometimes you will not lend against 40% of the market price because you don't want to take a risk, or it can be 50 as well. Advance will be restricted to 50% of the market value according to section 73 and 78 of the Mortgage Act. Approved credit agencies are entitled to create a security of shares by simply forms and procedures set out in the third schedule to the contract. Concerns unlisted company shares value of the shares. So unlisted company arriving at the price is a problem because there is no market demand. Will all of us get together, form a company, and you have to go through the book values and see what is the price of this share, right? So arriving at the price is a problem, and also finding another buyer is also a problem. You will have all the documents, but who is going to buy? If the rest of the shareholders are not willing to buy these shares, and you have to go back to the company and request them to buy back. So if the company says, or the rest of the shareholders going to say, no, we can't buy this, then you will have to hold those shares. So that is another risk when you mortgage unlisted or private company shares. That is why we recommend to mortgage listed company shares. When you don't want, you can easily dispose those shares in the market. Any questions? Right. Now, sometimes you might be wondering whether whatever the securities what we take have a lot of practical problems. Yes, you have a lot of practical problems with the securities what you take. We have to be very careful when you are dealing with securities, because all securities will have an inherent set of problems, legally as well as practically. I think the practical problems are the most difficult problems for you to sort out, right? You can't find solution for those, right? So therefore you have to be very careful when you are taking, because I told you the environment is corrupted. Customers know our weaknesses and they know how to handle the process, right? So they try to get the advantage out of that. Especially sometimes customers, they while mortgaging to us, they will go and discuss with another bank. So without knowing that they are discussing with another bank, you execute the mortgage. At the same time, he has got the benefit from that. So stocks is similar. So it's a matter of just changing the insurer and getting two policies. Because when you come to stock, you can't identify. You will say this warehouse, that's it. Number 10, Gold Road, Ratmalana, warehouse. So your mortgage is the same stock for different banks. So if I'm smart, I can say, okay, I will go to Mount Levinia Ceylon Bank. I can go to Ratmalana Sampath Bank. I can go to Morotua Commercial Bank. And from this side, I can come to Dehiwala HNB. So I'm not going to mortgage to the same area, because I know all the banks are in the same area, but I'm not going to mortgage to the banks which are in the same area. So I'm spreading that. Sometimes if you are in the same market, same area, you will get to know. But here I'm spreading where you can't have a relationship. So sometimes I can go and mortgage to a Nugiagoda branch also. So it's out of the way, not in the same line even. Customers are very smart. Be careful. because you are lending millions and millions. Sometimes you fail to register the required documents. You fail to get the right documents at the right time. You execute mortgages, stock mortgages, right? For 500 million, 1 billion, but you don't register within the required stipulated time of 21 days. So you are putting your entire organization at a higher risk just due to negligence. Because you might think because we gave it to a company, no problem. Sometimes when you come to this company corporate signatures, you send the documents for them to sign it and send. Because you say now corporate director is very difficult to get most of the time. That this is the answer. Corporate customers, they are big customers. They are very busy, right? They don't have time to come to the bank. Fine, no problem. But at least one of your officers should go and get the signature. Sometimes what you do, you send the documents after typing and they will complete and they will send. How do you know whether the correct parties have signed? And finally, your officers will witness to say that this signature was placed in your presence. Be careful if you have signed as a witness. You will have to go to courts and give evidence, right? And also make sure that you were present on that particular date when the document was executed. If the opposing lawyer asks, were you present on this particular day, are you leave? And if you realize, okay, you have signed because your boss told you to sign as a witness, and if you find, okay, you were on leave, that's the end of your witnessing. You will not be able to proceed that witnessing thereafter. So these are small mistakes, but it will make a huge difference in your case. Simply, you will lose the case. So be careful. When you are signing, at least make sure that you are present on that particular date. And in a practical sense, everyone should sit together and sign. Customer should be there, brand manager should be there, legal officer should be there, you have to sit there. And after the customer signs, you have to witness. But normally these things are not happening because of the market pressure, the business pressure. Customer has done the signatory after 1 week before the auditors come. Your boss might say, put your signature here. That's fine, no problem. But at least make sure that you know the party. That's number one. Number two, you were present in that particular date. If you are absent and if you have gone abroad for a holiday, Malaysia, so then how are you going to prove that you were present? At least if you were in Colombo and if you were on leave, you can say, on my way, I came to the bank and as a result, I was requested to see because I know the customer. That's how I have placed my signature. That's fine. But if you are outside the country, be careful. And another mistake what I see, when you come to this director's signature, embossed seal or company seal, embossed seal, all the same term, right? Now, is it a mandatory to have the common, also called as common seal? Is it mandatory to have the common seal today? Umali? Sorry, I'm taxing a little bit too much, Umali, you, because you are the only one who is supporting me to carry these lectures. So don't take it wrong. Umali, do you all take the common seal today?
So what do you mean by common seal? Like
embossed seal, that where you impress through a machine?
No.
No. Okay. Krishanta?
We don't do, sir.
Okay.
Not possible.
Any reason why you don't take the common seal?
I don't know, but mainly because of keeping one is difficult, no? You only use rubber stamp.
Okay. Tamara, any inputs from you?
We also not using emboss seals. Only secretarial functions, certain things using emboss seals for day-to-day business operations, not using.
Yeah, if a company is signing loan agreement, loan documents, do you insist the company seal, common seal? No?
Yes.
Indika? Any inputs from you? Rohan?
As a
Yeah.
currently,
Okay, go ahead, Ron. Sorry.
currently we are not using, sir, but early it was essential. I think there was a regulation or something. After that, we are not
Okay.
using the embossing.
Okay. Indika?
Yeah, we are using for like when you're signing an agreement, it is being used.
Yeah. Now, the question is where sometimes people argue where under the Companies Act, it's not 7 of 2007, which replaced the previous one. There's certain provisions to say that it's not mandatory. So the question is where now you can't come to an assumption to say that this is not required unless you check the articles of that particular company and see whether the common sale is a mandatory or not. If the common seal says this if the article says the common seal is not mandatory, no problem. Then you don't have to get the seal. But if the article says the common seal is mandatory, and if you're not taking the common seal, your documents are not valid at all. Because the common seal is the signature of the company. In the presence of two directors or director and secretary, the common seal is placed. So you're not taking the signature. Instead of that, you have a rubber stamp and you place the rubber stamp and get the signature. So simply the signature is not there. Fine. The law, there is some room for the companies. If they decided they don't want to have the common seal, that's permitted. But you have to check the articles. After checking the articles, only you can come to that conclusion to say that this common seal is not mandatory for this company's signature. If not, it's mandatory, right? And if the company's articles are silent on that aspect, articles is silent, but previously you know that they used. So in such an instance, request the board of directors to pass a resolution to say that the company is not placing their common seal or they are not using the common seal for execution of documents under the company's name. So then you are safe. But don't come to the assumption to say, no, today we don't want the company seal. Our bank, we still use the company seal. We have the common seal because we incorporated in 1986 after the re-registration in 2007. Still we use the common seal. So there are a lot of companies who still using the common because it's a control. Be careful, right? Now customer might say now under the new companies that there is no requirement of having the common seal. So that's the customer will always justify what he is doing. But as a prudent banker, you should not fall into his trap. Because he know that you don't know the theory and he is trying to get the advantage out of that. And he is executing documents without the signature. So be careful. Okay. So these are the weaknesses that we see in the system. Now, sometimes when the common seal is executed, so I told you that it has to be witnessed in the presence of two directors or director and secretary. So I have seen in certain instances that one director is signing today because of the customer convenience. You might say they both of them can't close the shop and come. It's a little bit far. So one director will come today and the second director is signing on the following day. Now, what is the date what you're going to include into the document? Is it the today's date or the tomorrow's date? Yes, can someone tell me? What's the date that you're going to use? Today's date or tomorrow's date? One director is signing today and the other second director is signing tomorrow. What is the date that you're going to include into the document? Yes? Indika?
Ideally, I think everybody has to sign the same date.
Yeah, so no, it's not normally happening now, right?
Uh,
So customer convenience, sometimes you allow them to come in 2 days. So my question, if the customer is signing in 2 different dates, what is the date that you're going to include? Is it today's days or tomorrow date?
it's the last date, I think. I actually think
Okay.
so. Yeah.
Okay. Omali, any inputs on that?
The latest dates when they have completed the document.
Okay, right. So the point is where now I sign today and my next other director is signing tomorrow. So you use the tomorrow's date in your document. If when it goes to courts, one basic question that will be asked from the party, your witness, whether this is properly executed, whether the parties have signed. So your officer will say, yes, it was signed on this particular date. And on the second day, I'm sure that I was out of the country. I went to India for a business matter. Tonight, I'm going to fly, and tomorrow, during your office hours, I'm not in Sri Lanka. I return back on the following day. So if you're including tomorrow's date, if I prove, look here, I was out of Colombo. So how can you prove that you signed, both of us signed on the same date? Your argument is wrong. I'm going to give visa and my passport and every tickets, everything to show that I was out of the country. So you can't maintain your case based on those documents. So that is the risk that you're taking. So only option, if you want to accommodate your customers to come in 2 different dates, make sure whatever the date that you're going to include into the document, both parties can come to your branch and sign. Now tomorrow, a police will take me to the custody for some reason. So I'm going to prove, look here, I was inside the custody on this second date where you say that I came. If you want to go and check with the whatever the authorities, I was inside the jail. So then what happened to your documents? So be careful. These are the points that you have to understand, the weaknesses of your documentation. You do certain things, but you don't know why you're doing it. When I ask the question why, you don't have the answer. So if you're doing something, second question you ask from you, why I'm doing this? If you don't have a clear answer for that, don't do it. Because you are doing a practice which was given by the previous person, even he doesn't know why he did those. So the same thing will be passing, and finally you are in trouble if something goes wrong. Because we are talking about millions of transactions, right? You give me 50 million and you gave me 50 million and my documents are weak. So how can you proceed with debt recovery? Right? This is due to lack of knowledge. That's the main reason. Today the bankers, their knowledge is very poor. I'm not blaming the system, because after some time, but I saw bankers, they don't do their banking exams. That is the biggest issue. Especially the banking law and practice of banking. There were 2 subjects those days. Those were the most 2 interesting subjects. Even for today, those are useful. So if you have not done banking, fine, no problem. Sometimes you might feel it's too late for you to do banking, but still try. If you possible, do it. But failing that, at least go for these 2 subjects for lectures. From A to Z, especially the practice law related to banking, all these points will be covered there. So you will get the knowledge, theoretical knowledge. Without theoretical knowledge, you can't run this business, because you are taking huge risk and you are putting your bank into huge risk as well. So be careful. Any questions? Any questions? So forget about the things what has happened in the past. Those are gone. But make sure tomorrow you are not going to do mistakes. That's important. And also a board resolution. Now, when you come to companies, I told you through companies, you can do magic, right? Just forming a company, I can cheat you like nothing. You think when you have a company account, oh, wow, it's the best account. personal accounts are much more controllable than company accounts. Complicated structured company accounts are worse than that. So these are certain points that you have to understand. Now, when you come to board decision, sometimes you request the company to bring a resolution. So the resolution will say, on such and such a day, the board of directors of this ABC Private Limited decided to open an account with X Bank by branch. And the authorized signatories will be so and so and so and so. So a proper resolution means it has to be on an original letterhead. You can't use TIPEX for a resolution without TIPEX. And your requirement should be clearly specified in that resolution. And either two directors or director and secretary can sign, but it has to be two parties. Normally, issuing extract one person can do. Most probably, it's a company secretary is authorized for that. But for better control, always the banks insist on two parties confirmation. So that is why the two parties are signing, and you will execute. So make sure that you proper, the content should be there, original letterhead, not a photocopy, right? And then only it will be a valid resolution for you to proceed. And also when you come to registration, where you have to register within 21 working days with the Register of Lands, within 21 in order to get follow the steps for registration, and within 21 working days at the Register of Companies in order to get the priority over the asset, right? So make sure that you file within the stipulated time frame, no excuses. Stamping also, it's very important. Now, theory says on or before execution, on or before you grant, you have to complete the documentation. On or before. So the stamping has to be also completed on or before granting the facility. Now, sometimes what happens, the customer says, it's very difficult for me to come during the office hours. I will come around 5 o'clock, right? And I will sign the documents. Can you please grant credit my account? So as a help, you consider that. So I'm coming at 5 o'clock and signing the documents, and you credit me on the same day itself. But for stamp duty, you are not posting the account, the entry on the same day. You think now tomorrow we have already balanced the stamp duty account also, we'll post this stamp duty entry tomorrow. So then where is this on or before? On or before is not there then. So then you will have questions with regard to your documentation. So if you are placing adhesive stamps, no problem. But for big amounts, you can't place adhesive stamps. You have to send it for the Inland Revenue and place the seal. Or sometimes you calculate and you post it to the Inland Revenue, whatever your GL account. So you have to prove that you have done this stamping or charge the stamp fee on or before granting. So I'm not going to say because of these technical things what I have stated, you will not be able to recover from the customer, but these are weaknesses. These are the weaknesses what we see where you can't go for debt recovery provisions, right? These are mistakes. These are silly mistakes. Yeah, you can't recover even. So how can you go and maintain a case at the under debt recovery provisions if you from top to bottom you have this type of silly mistakes? I told you, I challenge you at the beginning. I will ensure that 99% of your documentations are incomplete because of these silly mistakes. So be careful. It's a learning point. We are learning. So try to minimize mistakes as much as possible, because we need to move towards a culture that we have to safeguard our interests. We have to safeguard our documentation. If not, the customers will get strong. They might go and argue different reasons, and finally the judges also might think, look here, these bankers are doing a lot of mistakes, right? Without negligence and with due care are two important points for a banker's action. which come from the bills of exchange ordinance. But no due care, you divulge customer information out. Negligence is throughout the process, it's negligent. So how can you fight for your rights? Luckily, the bank judges, they think the bankers are borrowing, and we have therefore judgment should come in favor, because otherwise you can't recover your outstanding and you will not be able to pay the depositors. Because of that common argument, sometimes you will get the judgment in favor. But if you refer to the higher courts, Supreme Courts, they know that the bankers are negligent. And as a result, sometimes the high court judgments are against the banks. So don't do silly mistakes. If you're doing a mistake, do a considerable amount of mistakes, because you are taking unnecessary risk for huge amounts. 500 million mortgage bond failed to register within 21 working days. Or sometimes you just post it without register post. So when the court case comes, when you want to file the case, the original mortgage bond has to be filed in your security file. Sometimes you don't have a temporary outbook, permanent outbook. Any document that goes out from the bank, you have to include in the temporary outbook, and there has to be an officer who is following those information, whether you got the document in. Permanent out, in case of a settlement, you record everything and get the signature of the customer and release the document. Especially be careful when you are releasing documents. Original deed, original plan is a must. Because after 5 years, the customer might come and say, look here, I didn't got the original plan, original deed, original survey plan, original building plan. Other documents, of course, you can rectify and find, but original deed, original plan, original building plan, COC, how can you find once again? So you have to be responsibly act when you are handling customer documents, and when you are taking documents for mortgages as well. Any questions? Why this silence? Umali, any inputs?
So with regard to property mortgages, so once is after property is mortgaged, so then customer can rent out the property to third party. So still without knowing, after informing the bank, so still does bank need to do a deed of postponement with the tenants, or the priority will be given to the bank in case of default?
No, if you have executed your mortgage, no problem, you will get the priority. If the lease is subject to your mortgage or subsequent to your mortgage, then no problem. Once you went, but you have to make sure that once you want to eject these parties, they will exercise their rights because they have a lease agreement. So it will be difficult for you to throw them out, eject them out. You have to file another case to get permission from the courts to eject. Ejectment is not easy. So with your knowledge, or especially with your knowledge, if the lessee is there, then you get stuck, right? Even without your knowledge, if the lessee is there, still you will not get the vacant position once you acquire the property. So it will be, first you have to remove them out. Now it can be a large land where they will give 10 purchase to a person, a thug in that particular area. So your property is encumbered by that 10 purchase transfer deed land. So you will not be able to acquire the entire property because already he has sold a portion of that particular property to someone else. So you will get the priority, but you will have subsequent problems of ejecting those parties, because you have to maintain another case in the court of law for eject those parties. That's the challenge that you will face. Okay.
In that case, what is your advice, sir? Do we need to go for a deed of postponement?
Whether you have the postponement or not, it's not a big deal, because you already have the priority, right? Sometimes you consider this rental income, or lease income for customers' repayment. So with your knowledge, the lessee is also there, But in case if you go for parate and if you want to acquire the property, you can't acquire the property because this party is there. So then you have to file another case for ejectment and throw these parties out, and after that only you can sell it. So that's what happened. No point of having a postponed. So what you can do is you can go for a postponement. But still, if the party says, no, we are not going to go, what are you going to do? Then you have to, once again, you have to file an ejectment case, no? Is it clear, Mali?
Yes, sir. Thank you.
Okay. You said you are working for NTB, no?
Yeah, Nation
Yeah,
Trust.
why don't you ask all this from Chaminda? He's your head of legal, no? And Teja? Right, okay. Any other questions? Teja is my good friend. And Chaminda worked for Sampath Bank, and he came to NTB and he resigned from NTB. Once again, he
Again,
rejoined.
rejoin, sir. Yeah.
Yeah. Yes. Any other questions? Right. Now, this property mortgages, it's a common security. Everyone is happy when you see a property mortgage, but I will highlight the basic weaknesses of property mortgages. Just give me 1 minute, please, to get a glass of water. Just give me 1 minute. Right. So you might think, okay, when you have the property mortgage, you are up on the deal, it's good. Now I will highlight certain practical difficulties of property mortgages, which are useful for your day-to-day activities. Now, when you are taking a property, you will insist on the original deed. We'll ask for a survey plan. We'll ask for the building plan, and you will check the title for 30 years. Right. So after your lawyers confirm whether the title is okay, you will proceed. Right. And one important point, there are a lot of forged documents in the system. If I want, I can prepare another forged set of documents, and after mortgaging to your bank, I can sell this property to another customer. So when you go through the folios which are registered, only your transaction is there. Right? I can prepare another set of documents, and I can say the previous extracts, I can register those in the new folio, and I can get hold of a person not to have these cross connections or without stating the previous reference and the carry forward. And previous, I can say damaged. So the person who is going to purchase the property will not get hold of any of this information. He went to the land registry, he checked the last transaction, and previous, according to his references, previous damaged. So it's not easy, difficult thing to do these things, right? Today, you know, people accept bribes. It's very easy. Now, what happens parallelly, your property is mortgaged and another person has purchased the property. We'll say it's a land. So then when he start construction only, you will realize now some other party is going has purchased this property, and for you to maintain your case or to protect your rights, you have to file action against that person. That person will also try to file action against you because he has paid the money to the vendor. Sometimes vendor is in. Because your customer has purchased from the right vendor, and at the same time, the right vendor has prepared another set of documents and sold to someone else. So this vendor is missing. So there will be a legal battle versus you, your customer, versus the other person who have purchased. So two parallel lines will be there, not interconnected. That's one problem. So you have to be very careful. And also sometimes these days you see a lot of advertisements. My owner migrating, selling at low price. So in Sri Lankan context, people, if they are getting cheap goods, they will buy anything. Right now, this happened to one of the legal officers. This happened to one of the legal officers of a bank, right? Some time back, there was a property in Mount Lebanon, and normally at that time the property rate was around 400,000 per perch, that particular area. So this property was there for sale for 300,000, right? Okay, I will come into before that I will explain how it happens. Now for an example, X is coming to me to buy my land, right? So then X will say, I'm going to borrow from NTB bank. NTB wants my copy of the deed, copy of the plan, copies of the local authorities, and my vendor's selling price confirmation. So I will address the manager NTB bank. I'm willing to sell this property in lot number A of plan number 123 for so and so. Price 1 million per perch to so and so, and I will place my signature, and I'm going to give this document to X. So X is coming to your bank, and you will go through all the details, and you decide, okay, we are going to give the facility to X, right? So then everything is fine. Now this person got a copy of the deed, copy of the plan. He might say they want the copy of the NIC also. So I don't know whether actually the bank requires these documents. So I will, since I want to sell this property, I will give the copy of the NIC. Now what this person is trying to do, he will go and give the documents to the bank, and the NTB, they have taken all the steps. They have decided to give this facility to X. So after considering, you all have done what perfect right job, no negligence, nothing, right? And one of your officers will come and visit me to say, okay, he might say, look here, X wanted to buy this and he is taking a loan from your bank and we want to do an inspection. So I know that X told me that they are going to NTB. Then I have a relation. I know the transaction, so I will allow them to go through and they are happy. And one of your bank officers will come and they will do the inspection and valuation, everything, and they go. So from NTB part, you all have done 100% perfect. Nothing wrong in that. So this so-called X, he has a copy of the deed. He has a copy of the plan. He has my signature also. And at the same time, he has a copy of the NIC. So he will prepare a set of forged documents, original deed, original plan, forged. He will prepare a NIC and he will include Y's face with my details. And he will somehow train him how to place my signature. Right? So on the date of the transaction, instead of me, he is bringing Y along with the original deed, plan, NIC, and with my signature. So the legal officer go through, okay, NIC is right, original deed is there, original plan is there. They execute the mortgage bond and release the check to X, to Y. Now we'll say the property value is around 100 million. We'll say 50 million for the safe side. So I might say, look here, I don't have an account. This is the only property that I had. Can't I open an account with you? So then you refer it to the branch, closest branch, because now you have to canvas deposit. CASA is a must. So I might say no problem. I want to um, open the account, and in the long run I will do banking business also. I want to buy some assets out of this. I want to start a business. So he will give you a very colorful picture that he is going to be a continuous customer of your bank. Now today bankers are hunting for customers, no? So then he will deposit the check. It's your own transfer check, and he might say, look here, I want to buy some build whatever the machinery is. For that I want the money, and sometimes he might withdraw the full amount on the same day or the following day. He is not going to keep the money for a longer period. So the pay order went to the wrong person. He realized he got the money out, and thereafter X you will not be able to find. So you have created a mortgage account against the forged set of documents, and finally you're helpless. And when the bank will come to me and ask, look here, whether you sold, I will say, no, I have never sold. All the documents are with me. So I'm in trouble. You're in trouble. The party X and Y is missing. So there is no way that we can control this. Only there is one point. At the time of signing the documents, please make sure the officer who went for inspection should be there sitting along with the legal officer. Then at least he knows, okay, he has seen me. He might see this person who is coming is totally different, no? Now, when you see me, you can remember for a certain period. At least for 1 month, you can remember me. So sometimes the bankers, they don't send the officer who went for inspection at the time of signing. So that's the only way out that you can secure your position. Otherwise, the money will go to another person, and the original owner will have problem. You will have problems. Customer will default. You will not be able to trace thereafter X and Y. So this is a common incident that takes place in the system. So coming back to that example, this legal officer purchased a property, land at around 300,000 per purchase. She purchased it from her own, the housing loan. And when she started construction, the real owner came and claimed, look here, this is my property. I have never sold. And finally, this property was seller has sold the property by preparing a forged set of documents. So she has to give up the property and she has to pay the housing loan. Now, these are the practical issues. You have to be very careful. Customers are trying continuously to mortgage this type of properties to the banks. There was another incident. It took place around 5 years back. It was a property in Nigambo. It was a large land. And there was a security officer guard who was looking after the property. And all of a sudden, a bank has put their banners to say this property is in auction. So at that time, only the owner realized that this has been mortgaged and the person who mortgaged has defaulted. So then he called me and told, this has happened to me, but what can I do? Then I gave the required instructions for him. And what has happened, it was a large land with a huge value. There was a connection with the Register of Lands officer and a politician. They have prepared a forged set of documents and they have done certain further transactions as well. Now I'm the owner. You prepare forged set of documents and you say Krishanta is selling to Rohan. Rohan is selling to Umali. Umali is coming to the bank because Umali doesn't know anything about these things. You went through the title and you saw, okay, Rohan was the previous owner. Even Rohan doesn't know anything. Krishanta also doesn't know because the rogue has prepared the forged set of documents and sold to Krishnatha. So they have done certain subsequent transactions thereafter, and finally, Umali has given to X. X goes to the bank because X knows all this chain. X will go and ask because if the property value is, we'll say 500 million, X will go and ask, can I give me 100 million? Right? So the bank officer might check, okay, the property value is 500 million, giving 100 million is nothing. No. Upon the deal, somehow he will put a lot of efforts and approve because they are sure that the property value is 500 million. From the day one itself, the installment is arrears. Right? So it's a connected team, right? No genuine parties, all connected. Just to source transaction, they have done this. They have planned for almost 5 years. So poor owner, their children are out of the country, and parents were just staying here, and this happens to most of the majority of the people. The children out of the country, they are not interested, and there were bare lands. And finally, then only they got to know there is a connection between all the politicians and the ROC officers, and I don't know what thereafter what happened. So this is common. Preparing forged set of documents and producing it to you is common. Especially be careful with bare lands. If you have a bare land, at least put a caveat and secure it. Don't keep bare lands. And if you're mortgaging the bare land, be careful because when you go and ask from the neighbors who is the owner, they don't know. They might say there was a person who came long time back, according to their knowledge. They have gone abroad. But if you have a building, you have some track. Today, once you put the name in the Facebook, you can get hold of the details most of the time. So make sure that you try to check the details with the current available information and proceed with the transaction. So be careful. You think that the properties are very good. Properties are not so good. A lot of forged fake documents are there, and people are using those. A lot of lands are sold on forged set of documents. Be careful if you're mortgaging a bare land. And if the transactions are very closer, in 2018 there was a transfer, in 2019 there was a transfer, in 2020 there was a transfer, and that person is coming to purchase the property, mortgage the property. So you have to have the sense to understand this is unusual. When you look at the document, you should be able to come to a conclusion to say this is unusual, right? Then you have to ensure that you take the precautionary actions. Any questions? Any questions? Yes. කට්ටියට බය හිතලාද තියෙන්නේ මේ securities ගන්න එක? උමාලි? Right. Right. So those are the practical difficulties. I'm not going to discuss about the process. So as I told you, you have to ensure that you create the priority notice and secure your priority. And that is useful even after once 1 month you execute the mortgage. Your property will be secured, or you will get the priority. And also, if you are purchasing a land, your personal advice, try to purchase it from a known person or a known character. At least you know that this property belongs to so and so. At the same time, just see whether you can get hold of this person in a different manner, different way with this public information. Because sometimes a person might come under my name, his face and my details. So if you can Google or whatever with this Facebook and all sort of public information, if you can get hold of me and ask whether you are so and so, whether you are planning to sell off one of your properties at this place, then you're helping me to understand there is something going on behind the screen. At the same time, you're having a double check. So be careful, especially high-end, high-value properties. Maybe in Colombo 7, sometimes the owners, they have gone, they have neglected, no one is there. When you go to the home, you will realize whether it's a house that they have used for a certain period or not. Sometimes these people will do all the repairs and they will say, okay, we want to sell. I came from Australia. All my parents, everyone is abroad, and I want to sell this and go. Right? So be careful. Now the trend is people, they keep on moving out of the country. They leave the country. And this is a good opportunity for the people to prepare forged set of documents. Now at the same time, if I want, I can sell any one of your properties. It's a matter of just getting a photocopy of your deed. And if I have a photocopy, I don't want the photocopy. If I know the number and the notary, I can get a copy from the register of company, the register of lands, a certified copy of the original. I can prepare a so-called original, and I can prepare a plan to match with the schedule, and I can sell your property. So be careful. There are a lot of things are happening in this system, which you have to be very careful. Okay. So I have highlighted some of the problems. I just want to highlight this point, which was there last week in the web, new plans for debt recovery provisions. Now there was an argument where the public, it was a long article, I have given the references as well. The main allegation against the bank, they're taking the advantage, they are making profits. And finally, they're not protecting the innocent customers. So this is the second paragraph comes from the governor, but he says, according to his statement, where to start? So he has very clearly stated the content. Contrary to what you say, CBSL always takes a balanced approach when dealing with lenders and borrowers in the financial system. The main principle is that if a person borrows, she must repay. If a person is in difficulty, some relief could be given, but that has to be done without compromising the financial institutions as well. Remember, financial institutions rely on public deposits, which they lend to various borrowers, including industries, farmers, and SME sector. What would be the plight of the depositor if all loans granted by banks were defaulted on? That is why some safeguards must be assured so that the borrowers would be encouraged to pay. In my view, this is the governor's view, in the execution of Parate law, banks must be required to justify their decision of seizing an immovable asset to an independent third party who should also be convinced that the borrower has been given every opportunity to repay, but has not been able to do so. And therefore, the seizure of the property is fair and justifiable. We intend to propose that amendment to the law shortly. So impliedly what he says, they are going to bring some laws. Before you go for Parate, there will be independent party who will decide whether the bank has taken all the steps before Parate, going for Parate. If the third party will decide, if the third party says that we have not taken steps before we go for Parate, then we will not be able to go for Parate auction. So I don't know whether this is right or wrong. I got this from the above reference. I just want to share with you just to show there can be restrictions for our Parate law as well, which comes from the debt recovery, right? And unfortunately, if this type of restrictions comes, there'll be an independent party, right? It can be an ombudsman as well. So you have the financial ombudsman currently. I don't know what will happen. So if the banks, it's a subjective decision. Sorry, it's an objective decision. So he will have to see what type of steps that we have taken. If he might say, no, this is not enough. So in such an instance, we will not be able to go for parate, and we will have problems of securing the interest of the banks. So this is a little bit alarming. I don't know what level they will execute this. So I just wanted to share these thoughts with you as well, because it was there, I think 2-3 days back in the web. So these are the points that I wanted to highlight with regard to the securities and the available methods on the debt recovery and the practical issues of documentation. Do you have any questions? Yes? Any questions? No? Okay, then we can stop. Just I skip few slides just for information. You can go through. Once you read the slides, you can understand what is there. But I wanted to highlight not the practice, the problems. Because at your level, you should know the problems, then it will be automatically you can change the practice and you can find solutions. Right? Any questions? Okay, then thanks a lot for joining with me for the last 3 sessions. I hope that I was able to give some thoughts and new ways of thinking, because the market conditions are very competitive, right? As because of the competition, sometimes there will be undercutting among the banks, which I don't agree. Which should not be the case, because we are representing the financial sector. So we can have competition for getting the market share, but we can't have competition for platforms, right? So we have to share all our knowledge wherever possible, because we have to protect this industry. If X bank is going to affect, it will affect our bank also. Collapse of X banks will lead to our bank collapse as well. You can't stop that, because all these are interconnected. There's a ripple effect. Collapse of one will collapse the entire series. So as an industry, as banks, we have to protect the industry. So to protect the industry, sharing information is nothing wrong. Knowledge. But at the same time, you can have competition for customers, but not for the creating a super platform. So then we collectively create the platform. Anyone who is playing must play within that platform. Only difference will be your customer service. So I think we have to work as a team, the sector, if you want to protect this financial sector from the future challenges. That's something that I have to understand. I have to explain to you all. Any questions? Okay, then thanks a lot. Make sure that you take all precautionary actions, because today the current system is not so safe, and everywhere you get corona. But if you follow your basics, common sense, you can be free of that as well. So, and good luck and all the best. Don't stop at this point. Continue your education, because we want quality bankers. We don't want just bankers. So enhance your knowledge as much as possible. Get the knowledge. That's important, because whatever the knowledge that you gain, it will be forever. But one important point, now majority of you all are bankers. Bankers, after their retirement, there is no market demand. I will repeat that. Bankers, after their retirement, there is no market demand. So understand that and make sure that you have other skills as well after your retirement. Sometimes you might think, oh, it will come in 10 years time, it will come in 20 years time. Don't worry, the time is passing like nothing. Now this year, almost 2 months gone, right? Next month, March, then thereafter it will be the Aurudu. Then it will come the Vesak, then the Poson will come, then the August vacation will come. So months will just pass. So that's reality, right? So in between, another corona wave might come, then your focus will go for that, right? So then November, December, year is over. So time is running like nothing. You can't, when you see this side and turn to the other side, the time has gone. So be ready. There will be challenges in time to come, but be ready. Equip yourself and make sure that you are a capable banker. Even after retirement, no, you can start something on your own. That is the challenge that you have to accept. Bankers, they can take challenges, right? They are capable of doing that. Just handling, we are the only team, we were directly exposed to the customers, even during the pandemic. Health sector, that's their job. And they had all the precautions for that. They had the control. They knew how to handle, but we, without knowing, we got exposed. All economic conditions, we are exposed, right? So our capacities are high, but unfortunately, we are not focused on that, and we need to drive that as well. Okay, so then all the best and good luck. Continue your studies. Don't stop. Don't put a full stop. Put a comma and continue. After this, if possible, go for a master's, and at the same time, based on your skills, try to do focus on another qualification as well, not an academic one, a practical one, professional one. Okay then, thanks a lot. Thank you.